reality is there's a lot for the U.S. equity market to like.
AI has the potential to be the biggest productivity enhancer for the global economy since electricity.
What's different between now and the late 1990s is that day to day, the advancers are beating the decliners.
We're talking so much about AI now, and the market is melting up.
The S&P is just making new highs kind of week on week, and I think that's a little bit cause for concern.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowicz, and Annmarie Hordern.
Good morning. Welcome to Bloomberg Surveillance. World leaders are heralding a deal that promises to end the two-year war between Israel and Hamas, which is really giving people confidence around the world if it holds. Stock traders, meanwhile, still shrugging off fears of an AI bubble and government dysfunction, with the S&P logging its 33rd record high close this year. And now all eyes turn to corporate earnings, with Delta first out of the gate later this hour. A real question about how important that's going to be, Annmarie, given the fact that we're not getting anything else.
We're not getting anything else. We are still in a government shutdown. So we're in this data desert. And what happens when you're in an economic data desert, at least when it comes to the gold standard of economic data, you look to the C-suite to understand what is going on with this economy. And when it comes to Delta, Lisa, you know this better than anyone else, seeped in the airlines, it's going to be on these premium seats. Are the upper cohorts of society? Is corporate travel still robust? Are people still going out and spending, either domestically or internationally? And that is going to be on full display today.
It is the true barometer of the K-shaped economy. Meanwhile, we do have a sense that things are getting calmer around the world, whether it's in France, we can get to that later, or, of course, this deal that was struck overnight between Gaza, between Hamas and Israel. Do we have a sense of what the contours of this three-phase deal really are?
Well, this is a major breakthrough when it comes to this war that has been going on for almost 2 years to the day. What we do know is that the hostages will be released. We do know that Israel is going to pull back to a certain line. There's going to be more aid flowing through Gaza. But of course, this is going to be something that everyone is going to be on the edge of their seat, holding their breath to make sure that all parties involved are living up to this negotiation. The president last night said actually he plans to go to the region because this deal was inked.
Yeah, and we will wait to see what happened. I want to just offer you condolences because yesterday, I just want to let you know that I was
You had to
accused.
Start at 6:02?
I mean, honestly,
wait a little bit?
Clearly, you still have the mug out and who knows what's in there.
I'm still a fan.
Yeah, but you haven't gotten any sleep,
night.
and that's the reason why.
I was there last night. And also, so many Canadian viewers, all of a sudden, I'm learning all about you. I see your direct messages. I see your IBs. I see your emails. I will say congratulations.
Welcome to being a Mets fan. Meanwhile, what we're seeing in the market is a real softness, just heading into the open, but really flat after 33 consecutive record highs, not consecutive, but throughout 2025 on the S&P 500, going nowhere this morning. Meanwhile, the dollar just gaining a touch, a real question of whether we've reached that pivot point where the dollar weakening trend kind of plateaus, and a question on bond yields after that 10-year auction that was fairly solid. 30-year auction later today, 4.13% rounded up on the 10-year. Coming up this hour, Christian Mueller-Glissmann of Goldman Sachs as stocks bounce back to a fresh record high. Then we've got Norman Roule of CSIS as Israel and Hamas reach a breakthrough, and Vincent Reinhart of BNY Investments on what the government shutdown means for the Fed's rate path, if anything at all. We begin this hour with stocks little change as traders await the next round of earnings. Christian Mueller-Glissmann of Goldman Sachs writing this: we remain modestly pro-risk in our asset allocation. We continue to look for more opportunities for international diversification. Christian joins us now. Christian, thank you so much for being with us. I want to start the fears of an AI bubble. You've been dismissing them and saying that they are overplayed at this point. Why do you shrug that off and maintain a pro-risk kind of stance?
Yeah, no, I think there's a few things important here. I mean, first of all, the health of the AI ecosystem in aggregate is still quite good. You have these mega cap tech stocks that have strong balance sheets, that are profitable, that can kind of leverage their existing platforms and kind of, even without AI, they're good businesses. I think that's one part of the reason. And I think the other thing that is in bubbles, you often see overshoots on valuations. We haven't really seen that in the clearest way, especially in the last few months. Most of the performance of the mega cap tech stocks was actually driven by earnings. So I think putting it all together, that on its own is giving us comfort. But there's one really other important thing, is we are somewhat late cycle in the business cycle. And what tends to happen is the kind of equity market drivers are usually not anymore the economy as much and not anymore kind of like the traditional kind of growth picture accelerating because you're mid-cycle. Like it's often linked to liquidity and easing and structural opportunities. And I think this really supports the AI complex right now, all of that.
Which means maybe it doesn't support the rest of the market quite as much. What are you looking for in terms of the earnings that we're going to be getting later this morning, throughout the season, to edify this view of whether you really have to consolidate your risk-on stance in the AI shares, at least the United States?
Yeah, I think what's been quite unusual is that you have this somewhat weak labor market data. And unfortunately, we don't have much data right now. But I think going into this kind of shutdown, we've had quite a lot of weak data in the labor market. So we need to have a confirmation that the corporate sector continues to operate well, that it has kind of profit margins that are stable, possibly even up. And that the whole ecosystem around AI isn't slowing in a big way, that it can actually generate profitability and still upside convexity. I think these are the things that we are kind of looking for in the earnings season. And I think that's the main thing we have currently. I think this Goldilocks backdrop is very different to the traditional one, which you have mid-cycle, which normally, like Goldilocks, means growth goes up without inflation. Right now, it is more like the economy and the equity market are very different. And the equity market is doing really, really well, despite the economy not being particularly healthy and triggering Fed easing. So you don't want to disappoint too much on the real economy part and the labor market. And at the same time, the corporate sector needs to keep that narrative alive, that it's actually operating at very good levels.
Christian, how do you have opportunities for international diversification? How do you spot them, given what we are seeing in terms of a lot of paralysis and political instability around the world? I'm thinking of Japan, I'm thinking of France. How do you decide where you actually want to put money?
Yeah, it's a great question. I think to me, you want to think about like different cycles. And we always look at like the structural cycle, the business cycle, and the sentiment cycle. And it depends on your investment horizon where you kind of want to go. If you look structurally, I think what we've always been saying, it's a fight between inflation and innovation. And you need to have exposure to those areas. You need to hedge and diversify inflation. You need to have exposure to innovation. Innovation currently is very high in the US, very high in China, and the ecosystem in the global tech sector. So there's plenty of opportunities to potentially diversify beyond the US megacap techs and possibly diversify beyond AI and beyond the AI CapEx beneficiaries to more AI applications and AI beneficiaries directly. So I think there is international diversification structurally. And then I think we come to the kind of diversification of inflation part. And I think all over the world, we have interesting infrastructure assets, interesting businesses that in the long run have real cash flow growth. And also from a cyclical point of view perspective, you can see that Europe and Japan have lagged materially. So you could say that there is also a cyclical element that points you a bit towards like Europe and Japan currently. So you want to look for these opportunities. And sentiment, especially on Europe, is very depressed right now. So there's plenty of opportunities to think about international diversification.
Could a headline like Emmanuel Macron, the French president, announcing a new prime minister be a catalyst for this depressed European market?
I don't know. I think we've been very focused on the German fiscal spend as a potential catalyst. In a lot of our conversations with clients, there's a lot of skepticism and cynicism about the German fiscal spend. So if you start to see the money flow, that could really kind of make people focus a bit more on the reflation potential that comes out of Germany for the rest of Europe as well. And in terms of the French situation, I would say it's been treated as a very insulated and relatively contained problem. And as a result of that, the type of relief you can get is probably somewhat limited as well. But in France, you've certainly seen quite a lot of volatility, some sell-offs in the French banks, the French domestic stocks. You might see a bit of recovery there. But I wouldn't necessarily say there's a huge amount of French risk premium that's in European assets currently.
You haven't seen it necessarily trickle in. You say innovation and inflation, and I think buy stocks, buy gold. Where does that leave bonds?
I don't know, I find like bonds are still somewhat a less attractive proposition in the medium term for investors compared to the last generation of investors. We all know that bonds were really since the 90s, since the late 90s, a very favorable asset because it diversified equities, but it had a trend in the bond yields that actually meant the Sharpe ratios you got in bonds were unusually attractive. And we think that's quite unlikely in the coming years. So going forward, you need to probably work with equity bond correlations that are on average close to zero, and Sharpe ratios for bonds might be lower, especially as we talk about fiscal dominance. So you might also get lower real returns over time from bonds. So I think like currently we're very surprised about the flows. If you look at fund flows year to date into bonds, they're still incredibly strong, where people just seem to be attracted to the current level of yields, especially in credit, because they compare it to the last cycle. But the next cycle, the next structural macro regime, is probably justifying those higher yields. They're not going to come down anymore, certainly not in the back end. So to us, we don't really think that bonds are that attractive. Tactically, they might help you in case you get one of these recession scares coming from the US labor market, because the Fed still wants to buffer. But strategically, it's not an easy proposition what the bonds are offering.
Have you replaced any of your bond portfolio, government bonds of developed markets, with gold? I mean, this seems to be one of the theories out there that this is certainly going on at central banks. Are you recommending clients do that as well?
I don't know. Like, to me, like, bonds have a very interesting characteristic. They have a risk-reducing characteristic, and they have a return-generating characteristic. So they offer yield, and in risk-off, they also kind of can protect you. Gold doesn't really have a yield. And the risk-off relationship is not always that clean. So it cannot be a perfect replacement for bonds. We have plenty of other strategies like liquid alternatives and other things we're discussing with clients where you can think about kind of replacing bonds. But we do think gold has a quite interesting role to play in the portfolio to diversify fiscal dominance, to provide a long-term hedge for inflation. But what I would say, though, is obviously the performance in the last few weeks has accelerated so much that you have to be a bit careful about positioning tactically.
Christian Mueller-Glissmann of Goldman Sachs, wonderful to get your thoughts. Thank you so much for joining us this morning as we parse through how to understand the bubble fears, as well as some of what we've seen with respect to Emmanuel Macron, the idea that he could name a new prime minister. And you've seen a complete reversal in terms of market activity overnight, with a renewed hope that maybe France isn't falling out of bed.
Well, at the moment, that doesn't seem like they are, because there seems to be some sort of plan potentially, and they're going to have a new prime minister. So Emmanuel Macron, for now, is able to hang on. But for how long? How many times are we going to see this cycle? That prime minister was in power for 27 days. Will the next one last more than that? That remains to be seen. But it's just this entire idea that you're pointing to at the end. Political instability is rife right now in a number of countries. There's a lot of political uncertainty in terms of policy in Washington. So where else do you go? And a lot of people are saying gold offers that safety.
Yeah, well, talking about geopolitics right now, let's get you an update on stories elsewhere this morning. Here's your Bloomberg Brief with Yahaira Anand. Yahaira.
Hi, Lisa. Israel and Hamas have reached a deal for the release of all hostages held by Hamas in Gaza. In return, Israel will release almost 2,000 Palestinian prisoners and withdraw troops to an agreed-upon line. President Donald Trump said he expects the hostages to be released on Monday and said he will likely travel to the region to celebrate the deal. Meanwhile, as you all were discussing, French President Emmanuel Macron said he'll name a new prime minister by tomorrow evening, avoiding the need to call for a snap election. Outgoing Premier Sébastien Lecornu said sufficient progress had been made to allow work to begin forming a new cabinet, and that there are possibilities for a compromise in Parliament. And here, the U.S. government shutdown is now in its 9th day with no end in sight. The IRS announced plans to furlough just under half of its staff and said workers would be given back pay when the government reopens. Meanwhile, the White House is considering a plan to withhold back pay for furloughed federal workers. We'll have more when House Minority Leader Hakeem Jeffries joins Lisa and Annmarie at 8:15 a.m. Eastern. That's your Bloomberg Brief, Lisa.
Thank you so much, Yahaira. Up next, Israel and Hamas reach a deal.
The world has come together around this deal. Hostages are going to be released. It's probably, our time would be probably Monday. I think you're going to see people getting along, and you'll see Gaza being rebuilt.
Coming up next, we've got Norman Roule of CSIS to give us some insight on what the process is, what the phases really are. This is Bloomberg Surveillance. Welcome back on a morning where a lot of people are gleaning optimism from what we heard overnight. Israel and Hamas reaching a deal. Right now, what we're seeing in markets is a calm after yesterday's 33rd record high on the S&P 500, essentially flat. You're seeing gold build on record highs. Meanwhile, under surveillance this morning, Israel and Hamas reaching a deal.
The world has come together around this deal. I said Israel cannot fight the world, baby. They can't fight the world. And he understands that very well. So it's amazing the way it's all come together. Hostages are going to be released. It's probably, our time would be probably Monday. I think you're going to see people getting along, and you'll see Gaza being rebuilt. We're forming a council that, the Council of Peace, we think it's going to be called.
Here's the latest. Israel and Hamas have reached a deal for the release of all the hostages remaining in Gaza. The agreement is a major step toward ending the 2-year war. Our team coverage starts right now. Bloomberg's Tyler Kendall in Washington, Jumana Bersachi in Dubai. Jumana, I want to start with you. Do we understand what the contours of this deal actually are?
Yeah, that's right. So a major diplomatic breakthrough, also a win for President Trump. He announced it on Truth Social in the middle of the night, saying that both sides, Israel and Hamas, had agreed to phase 1 of the broader peace deal. And in that phase 1, we're talking about the release of the 48 hostages, 20 of them still thought to be alive, in exchange for up to 2,000 Palestinian prisoners, in addition to the IDF withdrawing to a pre-agreed line. Unclear at this point where exactly that line is, but we heard from the IDF a short while ago suggesting that they have already started preparing operationally to proceed with that withdrawal to a certain line. And now, beyond that, there are elements that are missing, including what happens with Hamas disarmament, whether or not there's actually going to be some sort of a mechanism to enforce that disarmament. That's always been a point of discussion and a red line as far as Israel are concerned. What happens with the future withdrawal of IDF forces from the Gaza Strip? Currently, around 70% of the Strip is still under IDF control. And then those bigger questions around future governance, President Trump speaking there about the establishment of this board of peace that he said that he would look to chair. Who will be participating in that? And what does it actually mean for effective governance? Who effectively on the ground will be involved in the governance of the Strip, in addition to the rehabilitation and reconstruction? So some really big picture questions here. But what I will say, it is a day of hugely sentimental value over here in the region and could mark the end of a devastating 2-year war. But the big question is it the beginning of peace?
Meanwhile, Tyler, we are hearing that President Trump could be heading to the region in the next few days. What do we know in terms of the U.S.'s involvement and President Trump's entering into Israel potentially soon?
Well, Lisa, I actually was in the room yesterday when Secretary of State Marco Rubio made this unexpected visit to a separate White House event that President Trump was holding in the state dining room and slipped him this piece of paper, which our understanding said that substantial progress on this deal had been made and that he could soon announce it on Truth Social. It was after that President Trump subsequently confirmed to us reporters in the room that he has plans to visit the region. He suggested that he would be headed to Egypt to meet up with his key negotiators, Special Envoy Steve Witkoff, as well as his son-in-law, Jared Kushner, and that he would also potentially be visiting Israel on this trip as well. We know, Lisa, that this White House has really been shoring up ties with regional partners ahead of the announcement to this deal. Of course, it is brokered around that 20-point plan that we saw President Trump unveil last week when Israeli Prime Minister Benjamin Netanyahu was here in Washington making his 4th visit to the White House.
Bloomberg's Jumana Bersachi in Dubai, Tyler Kendall in Washington, to both of you. Thank you so much. Let's turn to Norman Roule of CSIS, who wrote, "It is a profound and historic moment. However, this phase of the deal is fragile. It will leave the IDF in control of 42% of Gaza, and Hamas will remain armed." Norm joins us now for more. Norm, what will you be looking for to understand whether this deal remains in place and can lead to phase 2 and then phase 3?
Good morning. This weekend, we'll see an extraordinarily complicated series of movements taking place simultaneously. The IDF will need to withdraw tanks, pull back its drones so that Hamas and perhaps Egyptian teams move out to not only identify the location of living and the remains of hostages, but start engaging with Red Cross teams. Hundreds of tons of humanitarian supplies are going to be pulled into the region. region. You're going to see the movement of freed prisoners from Israel. Up to 2,000 Hamas personnel are going to be coming out and moving throughout the Gaza area. This is going to be a very, very active environment. No ceasefire is perfect. Things may go wrong, and we're going to see how each side responds to this. There is a tremendous amount of intensive diplomacy going on behind the scene involving all partners. Jared Kushner and Steve Witkoff are working today in Egypt to finalize details. And this diplomacy is going to contain all of this activity and make sure this stays in the direction where we need it to go. And then once this happens, we're going to want to see that momentum continue into the important second phase to begin to address all of those issues and to build on this fragile momentum.
Norma, who is going to be running Gaza in the interim? Who's going to be collecting the weapons? Who's going to be doing logistics on the ground?
Well, those things, it's not just that they need to be worked out, but they need to be worked out in a way that each side can save face. So Hamas will need to be able to deliver those weapons to an entity that it will be able to claim is a Palestinian entity, but such an entity doesn't actually exist. So it's going to have to be an internationally supervised entity of sort, but maybe Palestinians will receive it. Egyptians will have to be involved. This will take some detailing to be worked out. And probably I would suspect this is happening right now in Cairo, but it's just not going to be made public. Who comes into country? Those names are almost certainly being put together right now. But again, this doesn't need to be made public. And the people who are really focusing on this right now, frankly, it's not the problem we need to look at this weekend. This weekend, we need to make sure that hostages, prisoners, humanitarian aid, all these things happen. Once we get this done, then we can have that momentum built upon.
Norm, as you've been talking about, there has been intense diplomacy regarding this agreement that's been happening in Egypt. Where is the Palestinian Authority in all of this?
Well, the Palestinian Authority is, it's weak. The president, Abbas Abu Mazen, is not a strong actor. He's expected to be moved out and replaced in future elections. The Palestinians need to identify a future leadership. They need to identify and build a new architecture of governance. And they've got to prove that this architecture is not going to be militant. It won't be corrupt. It will be effective. And that the remnants of Hamas who will attempt to survive, who after the previous Israeli withdrawal took over, will not then turn this into a repeat form of militant governance. They're going to have to prove that they can sustain themselves. And again, that's why that international entity needs to be on the ground and assist them through this process. This won't be neat. It may not be pretty, but the sooner we can start this process, the sooner we can all begin to work this. And the partnerships that the Trump administration has established with Qatar, Turkey, and the Arabs in the region, the Egyptians, will provide profound support to make this happen. We have good reason to be optimistic.
Norm, we just have about 30 seconds. Do you know who's going to pay for the reconstruction, given that that's going to be such a crucial part of creating stability?
We're going to be looking at one of the most expensive reconstruction projects in the history of the world. It's also an urgent reconstruction project. So we're going to look at something that needs to be planned to take place over many years. And the Gulf is going to be turned to, but they're not going to throw money into projects that have endless budgets. So I think we're going to look at a planning process that's going to take some time to work through.
Norman Roule of CSIS, thank you so much for your insights. And we'll be catching up with you, I'm sure, again, as we parse through exactly what happens and as we understand what happens over the weekend with respect to whether this does hold.
This weekend's going to be really important in terms of also both these parties really understanding the trust that is in this agreement. And can they actually get to phase two? Most importantly are the hostages and, of course, aid going into Gaza.
Coming up, we're going to be talking about the geopolitics, but also domestically, how the Fed deals with not having any kind of information. Vincent Reinhart of BNY Investments joining us next, plus Danny Berger with your morning movers. U.S. rare earth stocks are rising as China curbs exports. More on that in a minute. This is Bloomberg Surveillance. After 33 record highs on the S&P 500, looking for a little calm this morning, a bit stasis pretty much across the board. What we're seeing, not a lot of action, maybe slight losses, but still early days as we head into earnings and as we head into a slew of corporate executives speaking. Meanwhile, what you do see is gold. It has been on a tear. We have seen it break through 4,000 today, taking also a bit of a breather. 3 hours away from the cash open. Here's your morning movers with Danny Berger. Danny.
Hey, Lisa, Ferrari having a huge drop. It's both Italy and U.S. listed. You're looking at the Italian shares dropping 12%. It is on track for its worst performance since 2016. It unveiled new financial targets, and they were seen as very conservative, punishing them, even though Ferrari usually gives conservative price targets. Even so, this is a car maker that's outperformed every single other listed car maker except for Tesla. So expectations are high for them. They also announced yesterday they were scaling back some of their EV ambitions. Elsewhere, it is the rare earth companies that are having a really solid day. Critical metals, one of the best, up 6.7% after China looking at curbing exports of rare earth metals. For their part, it comes ahead of a meeting between the presidents of both the U.S. and China in South Korea. And so you're feeling the stress there. Again, a lot of these companies owned MP Materials and other chat of maybe the U.S. taking stakes in some of these other companies. Finally, wrapping things up with earnings after the bell that we got yesterday, and that was Costco. Not earnings, rather monthly sales, and their sales for September, an 8% gain, even with really tough comparables. It's that value shopping that is drawing consumers to Costco, and they saw across categories. Fresh food did really well, jewelry did well, so even kind of a more like affordable luxury sort of feel to it, and their online shopping sales also were extremely strong, so those shares in the pre-market up 1.5%, Lisa.
Thank you so much, Danny. Right now, we are getting more corporate earnings. We've got Delta Crossing with a beat in terms of their expectation with their full-year adjusted earnings per share at about $6 versus the estimate of $5.25 to $6.25. So on the higher end, the estimate had been $5.80. We are seeing those shares pop up by more than 5%. A story of reacceleration that we have heard from United CEO. Similar story from Delta into the holiday season. Bloomberg's Benedict Campbell joins us now to give us some more insight. Benedict, how much is this a broad-based resurgence versus concentrated at the front of the cabin?
A lot of it is indeed at the front of the cabin. As you said, Delta and United have really pushed a lot of their business into that more lucrative end of the aircraft, and that's really where the money is made. We spoke to Ed Bastian, the CEO, ahead of the earnings, and he said, look, the demand is out there. It's really robust. The consumer is still prepared to spend, so there is really no slowdown there. But what you saw as well today in the numbers is the back of the cabin is also recovering. That's a tough end of the market. It's very hard fought after. You've got a lot of budget carriers pushing into that segment, but Delta did manage to achieve something of a turnaround also in the back. So across the aircraft, really a strong set of results here for the company.
Bloomberg's Benedict Campbell, thank you so much. And we will be following the story as it does really kick off the third quarter earnings season, and getting a view from the C-suite is going to be that much more important without any other information coming from official sources. On our radar this morning, Israel and Hamas reaching a deal to free hostages held in Gaza, a major step toward ending the 2-year war. The agreement is based on a plan unveiled by President Donald Trump, who said the captives would probably be released on Monday. Meanwhile, China unveiling broad new curbs on rare earth exports, demanding licenses for rare earths. The move giving Beijing more leverage heading into the high-stakes meeting between President Donald Trump and Xi Jinping later this month. I do wonder, Annmarie, if that's the right way to look at it, as leverage rather than a renewed kind of trade war that could potentially stymie manufacturing of cars and other types of technology in the United States.
Absolutely, because China has already used this playbook. They already made rare earths an issue for this U.S. government, and then guess what happened? All of a sudden, the H-20 chip was back on the table as a negotiating tool for the U.S. But the fact that China is doing this with rare earths, whether or not it's before discussions or not, is actually going to play to the administration's other policy of saying it's absolutely appropriate in their mind to take stakes in all of these rare minerals and earth companies because they are going to say, you see, this is why it is a national security concern.
Which is the reason why we're focused on lithium stocks and bridges connecting Alaska to Canada. Meanwhile, U.S. Treasury Secretary Scott Bessent has finished interviewing 11 candidates to replace Fed Chair Jay Powell. According to the Financial Times, candidates were grilled for up to 2 hours on their views on interest rates and Fed reforms. And perhaps we will actually get a couple of the final candidates who can make their debut in discussions and in the race. Sticking with the Federal Reserve, Fed minutes showing caution to ease driven by inflation concerns. Vincent Reinhart of BNY Investments writing this: with the federal government shut down, less data are available, which we think makes a data-dependent Fed more likely to ease. Vincent joins us now. Wonderful to see you. It's been too long. I want to start there. This idea that actually the meeting minutes showed what the dots showed, which is a huge dispersion of opinions and a lot of people who are reluctant to ease again heading into the year end. Why does the government shutdown change your calculus?
So what they did in September lays the tracks down for what they do in October. And what did they do in September? They eased. But they didn't strongly signal policy action, and they emphasized data dependence. And then they let everyone express their own view in the summary of economic projections. Makes it really hard to send a coherent message when you let everyone address their own view of the appropriate policy rate. But what was important about that is they were leaning toward policy ease and said they were data dependent. What that means is the data has to stop them, i.e., do you get evidence that disproves the case that it's appropriate to ease? That's what reconciled the whole group to the policy choice. Guess what? They don't have data that can disprove the case.
We just got data about 6 minutes ago from Delta. They came out with their earnings and the expectation that actually there's going to be a reacceleration into the end of this year with consumer demand, not just at the front of the cabin, but throughout the entire cabin coming back. I just wonder, is that data that actually should be relied on more, given the fact that we aren't getting official data and that the data that have been released by the United States have been mixed?
So they'll have to rely more on private data. They're already scraping lots of big data sources. There's lots of individual vendors. And don't forget, it's the Federal Reserve System, which means that you have all that staff at Reserve Bank talking to business people all over the country in their summarizing that in their beige book. So they have a lot of sources of information. They don't have an official imprimatur on it, but that has a couple consequences. One is they're not flying blind. However, we're more in the dark about how they're flying because they're using private information that won't be conveyed to us.
Okay, but you were at the Fed for what? Almost a decade.
It's actually a quarter century, but...
Okay. Well, tell us, what do you think they're looking at that's not the gold standard economic data that comes out of BLS?
What I can tell here is you're filling the entire media block with the news that is out, and that's earnings reports and
so they're
foreign
tuning
policy.
into surveillance, basically.
So they are looking at whatever they got. And what do they have? They have a lot more than they had previously. Lots of information from credit card processors. Lots of information from the big box stores that have up to the minute data on pricing and sales. They'll get credit reports. They'll get the anecdotal reports. And what do we notice in COVID? There was a whole blossoming of new indicators of high frequency demand. What was that? You apply a lot of resources with a lot of information. They're going to do their best, and that's what they're doing now.
There's not a ton of debate about what the Fed will do the rest of the year. How are you thinking about next year, especially as Lisa was just mentioning, the Treasury Secretary just wrapped up his interviews for who's going to lead the Fed?
Completely different. This year's easy. This year is let's agree on a macro forecast. Let's think, how has the Fed previously acted? What is an appropriate policy rule? And then just plug your numbers in. And that will get you probably another half point of easing in 2025. It's a closer call toward the end of the year, exactly because Maybe inflation will come up. Maybe the economy won't soften as much as they're worried, because they're easing as for risk management. They're buying insurance. By the end of the year, they may not need it. Next year, completely different. Why? Because the Federal Reserve System is set up so that the leadership of the Fed turns over with the political process. So the administration will get new slots. And the Federal Reserve System, the whole, is set up to give the board preeminent role in monetary policy. So the White House is going to use that.
As an economist watching this, does it worry you that you've seen such a devaluation of the dollar and that you've seen gold increasingly take hold as a haven type of instrument?
So I have a Bloomberg worksheet right on my desk, which is Independence Watch. What do you look for if there were concerns about the future of central bank policy making in the United States? You would look at non-dollar assets. So you would look at gold. You look at the price of some crypto. You would also look as hard as you can at the whole term structure of U.S. interest rates. A little worrying that, yes, the very little volatility in the bond market. 10 years has been flatlining, but the 10-year forward has drifted up. And some measures of inflation compensation have come up. Thus far, not a lot of warning flares in markets about worries about central bank independence, but we think that's going to come.
Vincent Reinhart, thank you so much. Great to see you. Vincent Reinhart of BNY Investments. We are seeing the least volatility right now in the bond space and implied bond yields going forward since 2021, even amid auctions, concern about this inability to really pinpoint inflation.
And a government shutdown as well. So you're kind of, flying blind. There's a government shutdown and the market's just shrugging it off.
Yeah, right now I'm looking at my Eco screen and it just is this huge yellow banner.
It's getting a little depressing.
U.S. government data releases are impacted by shutdown. That's all you got. Right now, let's get you an update on stories elsewhere this morning. We do have this. Here is your Bloomberg Brief with Yahira Anand. Yahira.
Hi, Lisa. Delta Airlines reported better than expected third quarter results, helped in part by leisure travelers splurging on premium seats and a rebound in corporate travel. The company said it sees robust demand continuing into 2026, and CEO Ed Bastian said the airline hasn't seen any impact to its operations from the ongoing government shutdown. Shares are up 5.8%. Meanwhile, the U.S. is approving several billions of dollars worth of NVIDIA chip exports to the United Arab Emirates. Sources telling us here at Bloomberg, the approval comes after the UAE made concrete plans for a reciprocal amount of investments to the U.S. The licenses mark the first permits for NVIDIA AI chip sales to the UAE since President Donald Trump took office. And Netflix is making its video games available for play on TVs for the first time.
We are now announcing, we're going to announce here actually, that we're going to have these social party games, a pack of social party games that you can play on your TV with your phone as the controller. And it's things like, recognizable games like Boggle, you got Pictionary, we've got a Lego party game, we've got Tetris, we've got like a Mafia style whodunit.
The company has been offering games for 4 years, but until now, users had to play those games on mobile devices rather than on their TVs. That's your Bloomberg Brief. Lisa?
Thank you so much, Yahira. Games, the more we need them for the kids. Maybe they shouldn't be listening to this. Up next, not that, a flight to safety.
We have gold rising another 10% by the end of next year, but with significant upside, with reserve managers in central banks realizing that the truly only safe asset, if you hold it in your domestic vaults, is gold.
Marc Chandler of Bannockburn joins us next on that. This is Bloomberg Surveillance. It's a quiet morning, at least so far, on the stock space. You're seeing basically stasis after 33 record highs on the S&P 500 so far this year, 31 record highs on the NASDAQ. So this might be a buyable dip considering the one down day that we've seen in more than a week was quickly bought yesterday. Meanwhile, what you are seeing is gold pretty much also reaching stasis after climbing through 4,000 yesterday for the first time. It has been a record streak for that. And under surveillance this morning, this has been the flight to safety.
We have gold rising another 10% by the end of next year, but with significant upside, with reserve managers in central banks realizing that the truly only safe asset, if you hold it in your domestic vaults, is gold. Cyclically, with 100 basis points of additional Fed cuts, you get an additional boost because ETF holdings tend to rise in the gold markets when rates come down.
Here's the latest. Gold on track for its best year since 1979. While the U.S. dollar faces its steepest yearly decline in more than 50 years, Marc Chandler of Bannockburn saying this: "I'm not sure the dollar has lost its global standing. To me, the dollar's brand has been tarnished." Marc joins us now. Marc, thank you so much for being with us. Let's start with understanding what the difference is between being tarnished and losing its clout.
I really think that the dollar's role as the key financial currency in the world has really changed in the last 12 months. I think that what we're seeing is primarily a cyclical development and not this big structural, like the whole world is boycotting the dollar or something like that. As you know from the TIC data, the U.S. Treasury's data, foreigners have bought more U.S. assets this year through July or August than they did last year or the year before that. So I think that what oftentimes happens, I think, on the markets is that people attribute structural factors to what turns out to be cyclical factors. And I think that the dollar's decline, it's still overvalued against most of the G10 currencies. And so I think this is just a cyclical adjustment after something like a 10-year dollar rally.
So how do you understand, Marc, the idea that central banks around the world are diversifying away from dollar-denominated bonds, dollar-denominated assets, going more into gold in a sea change that we really haven't seen before in terms of its size and scope?
Yeah, so I agree that there has been some central bank buying of gold. I think that we also tend to exaggerate why these central banks are buying gold. For example, it's not just as a criticism of the U.S. or something like that. Poland, for example, which is a NATO member, has bought more gold this year than China. So I do think that there is some diversification going on. But I think that when you see these charts that show foreign central banks own more gold than treasuries, I think it's really just a reflection of valuation. That is, gold has shot up while treasuries haven't. So I'm not so concerned about that. And I really think that we've got to just keep it in perspective, too. Think about what China has, over $3 trillion of reserves and only a couple $100 billion in gold. I just don't think the gold market is big enough to really supplant the role of global bonds as reserve assets.
So do you think this rally can continue? Or do you think at some point it's going to hit a pause?
If you're talking about the rally in gold, I have no problem with gold rallying further, but I think that we confuse what's going on again. It's not just the central banks. It's people like myself who are buying gold because it's moving higher. We're momentum traders, trend followers. They're sucked into gold as well, and silver for that matter. So I think that it's not just central banks, it's retail. And when you look at the correlations, which Bloomberg makes it very easy to do, gold and risk assets like stocks are moving up together. So that tells me when there is a big setback in the stock market, there's likely to be a big setback in gold as well. It's not just a safe haven. It's also, like I say, highly correlated to other risk assets.
But don't you think there are some underlying issues with political instability around the world or political nervousness, whether it's in Asia, in Japan, whether it's France and Europe, or whether it's just uncertainty at what's going on in the United States when it comes to the direction of policy?
Yeah, no, I think that's the narrative, right? Is that the war in Russia's war on Ukraine, peace in the Middle East, and you saw what happened with the deal struck. Gold sold off about $25 or $30, held at $4,000 level in the spot market, and bounced right back. So it doesn't seem like it's just geopolitics, but I do agree that there has been some demand for gold that's based on this uncertainty. But you know, the Japanese election was just this past weekend. The French problem, the political problem, has sort of been persisting all year, and we could see a Belgium downgrade ahead of the weekend by Moody's, which has Belgium on negative credit watch. So yeah, I am concerned about that, but I still don't really buy into that gold's going to be the big savior of all this.
Marc, I'm just wondering how tied the U.S. dollar is to AI and this idea that American exceptionalism is deeply intertwined with the tech prowess of the likes of Apple and Amazon.
I think you're right, Lisa. I think that people like myself expected the U.S. economy to do somewhat worse than it's been performing so far this year. And part of the story that macro people like me missed, I think, is just that role of AI. I think I read one estimate that suggested that AI accounts for about 40% of growth this year in the U.S. So people like myself, I think, underestimated that role of AI, and I think it helps explain the resilience of the U.S. economy. But I'm still concerned about the performance of the labor market. I think that that's going to lead to a slowdown, and we just haven't quite seen that filter through into the GDP measures yet. Like I say, AI seems to be a big part of that reason.
Marc Chandler of Bannockburn, thank you so much as we watch the dollar gain a little bit of ground versus the euro. But we have seen it actually gain, to Anne-Marie's point, because of what we've seen everywhere else, not because necessarily the U.S. is doing so well. I wonder, though, if that changes. And we got Delta earnings not that long ago, about 23 minutes ago. They were better than expected. Their forecast going forward is at the high end of the estimate. And they talked about accelerating demand, not only at the front of the cabin, but also in the economy seats. And I'm just wondering how much this sort of is the economic data that we can rely on that speaks to a brighter feeling in the U.S. economy.
Well, at the moment, it feels like it's the only economic data. You just pointed to the eco screen that still shows that, sadly, we're not getting any data because of the government shutdown. This was the quote from the CEO that stood out to me. Are customers financially in a good spot? Which customer? The customer in 1A or the customer that's sitting all the way in the back of the plane? You talked about the K-shaped economy. Peter Cheer's been talking about the little I with the dot, that financial concentration amongst the wealthy. We're seeing it as well in the stock market, and then everyone else. And that is what we've been seeing in the likes of Delta and American, United. When you look to the other airlines, they're actually struggling because they cater to a different part of the economy.
Yeah, and actually Delta's saying that even its more budget-oriented offerings, seeing ongoing demand, not necessarily the same sort of robust demand, but still that ongoing demand. To the point about corporate travel, corporate sales were 8% higher in the third quarter. And the company said about 90% of companies expect travel volume to rise or remain steady in 2026. I wonder how much this accompanies some of the deal volume. We saw that from Jeffries, this idea that if all the deal makers are going to be as active as we hear, they got to be getting on planes and going to meet people. But either way, what this points to is that reacceleration, even in the main economy cabin. Ed Bastian, the CEO of Delta, saying that even that part of the plane saw an improved sequential performance in the third quarter. Again, how do you square this with concerns about the labor market, with this idea that we are seeing something that requires Federal Reserve accommodation?
Well, this is a challenge. Are they cutting into strength, which some people have made that argument? It is a great point, though, about what is going on in terms of the lower end consumer, because Delta last month cautioned about this consumer and how that's been tough. It seems to be that these individuals are still chugging along and people are still buying flights. Corporate spending, have you seen some of the fares to go transatlantic? Yes. They are in the double digits. So in that end, these airlines are making a ton of money.
I'm just saying, a main kind of event for a lot of people can cost up to $14,000 to go transatlantic, to go in some of the front of the cabin.
Like a Swiss Alps adventure?
Who knows? All I know is that maybe I won't be sitting there. What we are seeing elsewhere is Pepsi also reporting earnings and beating expectation, with those shares rising as well. We'll continue breaking down the earnings coming up next. Phil Camporeale of JPMorgan, Don Schneider of Piper Sandler, former senior White House advisor Amos Hochstein. Do not miss that. And Sonal Desai of Franklin Templeton Fixed Income. Good morning.
We're getting some type of softening in labor demand. How big that is, we can debate.
We're cooling as an economy, and getting back to normal policy rates seems to make sense in that backdrop.
Perhaps rates are not all that restrictive given the elevated valuations and wealth effect in the economy.
There's lots of stuff brewing underneath the surface. Cuts seem a little premature.
The slower the Fed goes up front, the bigger the risk is that they have to do a little bit more later.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowicz, and Annmarie Hordern.
Good morning. Welcome back to Bloomberg Surveillance. We're finally getting some economic data from corporate America. Delta earnings coming in better than expected, with U.S. consumers still shelling out. Meanwhile, optimism abounds overseas as Israel and Hamas strike a deal. What we are seeing in markets is a bit of calm after 33 record highs. I keep going back to this. And the AAII Investor Sentiment Survey coming in at the highest levels that we've seen so far this year. Annmarie, a bit of a pause this morning, and yet nonetheless, it seems like that reacceleration, at least in the initial forms that we're seeing from Delta, is taking shape.
You look where the stock market is. You mentioned all the record highs. You see what Delta is saying. It's not just the upper cabins. They are seeing seating in the maid cabin also improve, as they were quite nervous about those individuals being able to get on planes and fly. You wouldn't think that the Fed needs to cut interest rates. You wouldn't think that we were in a government shutdown and people aren't getting paid. So there does seem to be this dichotomy of what corporate America is saying, what the market is saying, and what the Federal Reserve is really concerned about at this moment. When you look at the minutes, overall, there is this concern and bias to a weakening in the labor market.
And this does have sort of a spin to it about who is going to be the leader of the Federal Reserve next year. Vincent Reinhart of BNY Investments came on earlier and said, next year completely changes. You've got different leadership, and then you have a completely different calculus. Our understanding is we're getting close to actually understanding who that person might be. Is that correct?
Well, the FT is saying that there was a grilling between Treasury Secretary Scott Bessent and some of his advisors, like Mr. Hunter McMaster. 11 candidates. We know where Trump's been thinking. It's the Kevins, right? Potentially, it's going to be the Kevins or that. Governor Waller.
Keep going.
But interesting, the Financial Times gave a shout out to BlackRock's Rick Reeder, a friend of the show, saying he performed, quote, very well. So potentially there's going to be someone really from the outside that could come in when it comes to this Fed. And the Treasury Secretary has made it very clear. He doesn't want the data dependency we've seen under Powell. What he wants is more of a Greenspan Federal Reserve that is forward-looking.
Meanwhile, the data dependency so far has been coming from the corporations, really kicking off. Delta, I mentioned Pepsi seeing a turnaround, signs of a turnaround in U.S. beverages driven by soda. I guess we're drinking soda again. Shares rising, announcing a new CFO, which is interesting. It kind of speaks to this changing of the guards that we're seeing in a lot of corporations. Also talking about trimming some staff around the margins. So are we getting a jobless recovery? And that is something that we keep wondering. Meanwhile, later today, we do have $22 billion of 30-year bonds being auctioned. Yesterday's 10-year auction went pretty well. You're seeing quiescence in the bond market, with volatility dropping to its lowest level going back to 2021. Meanwhile, you are seeing gold still on a tear. I wonder, Annmarie, since you're such a specialist in the oil market, why you think there isn't a bigger reaction in the oil market to what we see with Hamas and Israel?
Well, I think you're just seeing like the cooling of tensions, and the president has been talking about this for months. I was in the room with him recently when he was standing next to Prime Minister Benjamin Netanyahu talking about this peace plan. A lot of people thought at some point this would come together, given the fact they have all these players involved and constant diplomacy is happening. But at the same time, really what's going on with crude is just the fact that OPEC just continues to release the valves and the barrels have been flooding in. So that's the story that everyone's focusing on.
Coming up, we'll be talking about that. We'll also be talking about the AI bubble that isn't. Phil Camporeale of JPMorgan with Wall Street resuming its record rally. Former senior White House advisor Amos Hochstein with a breakthrough hostage deal between Israel and Hamas, and Sonal Desai of Franklin Templeton as a divided Fed struggles with a dual mandate. We begin this hour with stocks returning to all-time highs, trying to climb upward. Phil Camporeale of JPMorgan writing, while there is always a lot of noise for investors to parse through, uncertainty is moving to certainty, which will allow the market to continue to grind higher. And Phil joins us now for more. Phil, certainty. Where is the certainty coming from? What kind of certainty are you talking about?
So I'm talking about certainty in long-end rates, Lisa, which we've talked a lot about. So if you were to mark-to-market the Federal Reserve on September 17th when they cut rates, the 10-year note was at 4.1. And I think you guys said today that the 10-year note today is 4.11, right? So we are really huge change. And this is what's different than last year, because last year people were saying, okay, Federal Reserve is cutting rates without a recession. And then the 10-year note went up by 100 basis points in the fourth quarter. This year, what we believe is that the 10-year note stays at or around these levels. 10-year note is the biggest kind of stimulative rate on the yield curve. It's not the federal funds rate. Lisa, you could actually make the case that cutting the federal funds rate is not stimulative because of all the cash that people have on the sidelines that they're going to be getting paid less on. So our view here is the financial conditions as measured by Goldman Sachs care a lot about long end rates and credit spreads. And that financial conditions index today, easiest point since 2022. And as you've mentioned a couple of times, interest rate volatility, I call the MOVE index the older and wiser sibling of the VIX. Like everybody, the VIX is like the baby child, right? And they're like, everybody kind of pays attention to the VIX. But then there's the wiser sibling, which is the MOVE index. And nothing gets equity investors more nervous than when they think bond people think something's happening, right? So that low volatility on the rate side does so many things. It allows us as asset allocators to protect ourselves with bonds, right? And I think it loosens up just deal activity. That M&A deal activity coming into this year was the lowest since the dot-com bubble. Right? So all that stuff, I think, is stimulative if rates behave themselves.
All I could say is that might be the case. It's not as if bond investors are not nervous. You talk to every single one of them. They're sort of cowering in this feeling of stasis just because there is no conviction on either side. Are you saying that AI bubble concerns are kind of irrelevant at a time where there's a lot of liquidity?
Yeah, so certainly. So the liquidity side is one of those things as the market continues to as liquidity continues to try to find places to go. I want to bring the Big Beautiful Bill Act in on this as well with AI. So this permanent extension of the full depreciation of domestic R&D. In other words, people can do AI, CapEx, and they can write it off. And I think that is a really important piece of the Big Beautiful Bill Act, along with, maybe this is part of Delta earnings this morning. So we estimate that in the Big Beautiful Bill Act, that about 70% of households are going to get a refund next year. That refund is going to go from about $3,000 to about $4,000 on average. That's a huge deal. Now, you may say, okay, what is that going to do to inflation? But when we think about that low-income cohort, right, not everyone has a stock portfolio. Not everyone has a 401k. Not everyone has a house, right? So that lower-income cohort that may be getting some help next year, I think just creates a more resilient consumer as we head into next year. And then on the AI side, listen, you don't need multiples to expand. Like, we don't expect the S&P 500 multiple to go from 22 to 30, but we do expect earnings growth next year to be double digits, which can deliver the return. And I'd be remiss to not talk about the other levers in the portfolio working. EM's up 30 this year. ETH is up in the low 20s. And I've never said this to you guys in October, a globally diversified portfolio is keeping up with the S&P, which is the best kind of story I can tell.
I want to pick up your point on the Big Beautiful Bill, because it's a good point. But isn't it counteracted by the fact that everyone's pretty much saying we're going to get the tariff knock-on effect on prices next year?
Yeah, Annmarie, I've heard, so like companies like Walmart are waiting, right, for this to happen. And I certainly think that's the case. But for inflation, like to think, okay, is the Federal Reserve going to have to make a U-turn and get hawkish next year because of inflation? I think you'd have to see it in something like shelter costs. And you guys have done a great job talking about kind of the components of CPI. That goods price inflation, Annmarie, I don't think is as important as what's happening in shelter, which we continue to think is a continued downtrend. Now, also, even if inflation stalls at 3 or so, it's a nominal growth story that we care most about. So nominal growth is real GDP plus inflation. And if real GDP, we think next year is going to be about 2, which is a little bit above trend, and inflation about 3, that's 5% nominal growth, which again, I think fuels the earnings story into next year.
When you say policy error is top of mind, do you mean out of the Federal Reserve or out of the White House?
Kind of both, right? I mean, it's if we've learned anything from this cycle, is that policy can turn on a dime, right? So I think
it's like a little yippee.
Yeah. So I think into this year. So I think the Fed meeting at the end of this month is kind of baked in the cake. I don't think the Fed goes once and then stops. So I think they go in October. We believe chances are, again, they go in December. But I would agree with your prior guest, Vincent Reinhart, on this. As we head into next year, it's really difficult, not just because of the May of 2026 handover, but also because the economy can change on a dime here. So the policy area that we're thinking about that's front of mind is the transmission mechanism. And this is how I started this, right? Even if the Federal Reserve is cutting rates, what's happening to long-end rates? Because if that transmission mechanism is broken, the S&P should not be at 22 times earnings here.
If the transmission mechanism, though, is dependent on data, because this is a data-dependent Federal Reserve, we're not getting data. And actually, if
second week in a row without claims, what am I going to do?
It's upsetting. Normally this would be Claims Thursday, but it's not Claims Thursday. It's Delta Thursday because that's the data that we have, and the data that we have points to a re-acceleration, which you were talking about. So if the Fed is ignoring the re-acceleration because they're looking for an excuse not to cut rates further, does that increase the risk of that kind of inflationary boom next year, given the fact you're talking about the big, beautiful bill, you're talking about the fact that consumers are re-accelerating, and it doesn't seem like things are losing momentum, at least from corporate executives, Sweet?
Yeah, certainly. And that's why we have kind of this unknown into next year. But it goes back to, even if you get this inflation pickup, if it comes with growth, Fed could be on hold and you can get the earnings story into next year. So we are not kind of holding our portfolio hostage to the Federal Reserve easing policy next year. I just want to put it there, right? So next couple of meetings, sure, the Fed is responding to a labor market that they think is stuck in neutral. Now, they responded to a labor market last year when the Somm rule got triggered, even though Claudia Somm said this time is different. And then by December, they were saying, we're pretty much done, and we think inflation is going to be higher next year. And then instead of the Santa Claus rally, everybody got coal in their stocking last December. So that is something that is top of mind for us. If they have to change course based on an inflation story that's picking up, which you just pointed to, right? The fiscal story definitionally can be inflationary, but we need to figure out what the growth story is. And the growth story is what got people scared coming into this year because of the tariff story. And that tariff story, hopefully, it's not going to reemerge next year.
And maybe that coal can be of turn to diamonds.
Let's do it.
Terrible. All right, Phil Camporeale, thank you so much. Really great to see you. Phil Camporeale of JPMorgan. Let's get you an update on stories elsewhere this morning. Here's your Bloomberg Brief with Yahira Anand. Yahira.
Hi, Lisa. Israel and Hamas have reached a deal for the release of all hostages held by Hamas in Gaza. In return, Israel will release almost 2,000 Palestinian prisoners and withdraw troops to an agreed-upon line. President Donald Trump said he expects the hostages to be released on Monday and said he will likely travel to the region to celebrate the deal. Meanwhile, China has unveiled new curbs on its rare earth exports, citing national security grounds. The curbs mirror Washington's own export regime, which bans Chinese companies from accessing cutting-edge chips and the tools to make them. The provocative move comes as the U.S. and Chinese presidents prepare to sit down at a summit in South Korea to hammer out a trade deal. And TSMC shares are rising after reporting better than expected sales on sustained AI demand. The world's largest contract chip maker reported revenue rising 30%. TSMC executives see the cloud computing build-out as a major long-term growth driver. That's your Bloomberg Brief, Lisa.
Thank you so much, Yahira. And it is interesting for people who are doubters on the AI trade, the fact that TSMC reported such a significant boost. On the margins, you're seeing confirmation of the AI story, even amid all of the naysayers.
Well, they're the designer for NVIDIA, AMD, Broadcom. They're all using these chips, and you see all that money come out constantly, all these new announcements. Well, it's one place that they're sending that cash to.
Yeah, Lisa Su sitting pretty after AMD shares up something like 93% so far this year. Up next, federal paychecks in jeopardy.
Would you encourage Congress to pass a standalone bill to pay our service members?
Yeah, that probably will happen. We'll take care of it. Our military is always going to be taken care of.
Don Schneider of Piper Sandler joining us next from New York. This is Bloomberg. Welcome back. We are talking about markets, about the economy. Annmarie is listening to the Yankees lose again last night.
I'm just kidding. I keep getting trolled by these Canadian viewers.
I just see this, and then I hear noise, and I see that cup, the mug that is filled with who knows what. I know, you're just experiencing what the Mets experience.
Exactly. I'm experiencing what the Mets fans continuously. Mets fans continuously go 1986, 1986.
All I know
at least ours was sooner, 2009.
People yelled at me for not showing enough class. Go New York. And I'm sorry for your loss. Right now in markets, you are seeing essentially a pause after 33 record highs, unchanged on S&P futures. It really has been remarkable to think of this steady climb into any kind of wall of worry. It was yesterday sort of the reprieve, the buy the dip moment after a momentary blip. Meanwhile, in the bond space, it's also been really quiet. To Phil Camporeale's point, you've seen that MOVE index fall to some of the lowest levels, the implied volatility in bonds, going back to 2021. You are seeing seeing nothing really going on. 30-year yields lower ahead of a $22 billion auction at 1 p.m. Eastern, 4.7%. And we don't check currencies anymore. Now we just check gold. And what you can see is gold kind of flirting with maybe rising again for this unbelievable, unprecedented rise to a record high. The gains more than 50%. And I think, Annmarie, it is important to keep checking gold, considering how much people are considering it as sort of an alternative in terms of a haven trade.
Absolutely. 11 straight months in a row, you see China once again doubling down on this gold buying. And Goldman Sachs is talking about nearly 5K by the end of next year. Almost this time next year, we can see another rapid rise when it comes to the precious metal. And I love what Marc Chandler had to say, because it really is so many different stories at once. It's a dollar story, it's central bank story, and it's political instability around the world.
Yeah, which is the reason why a lot of people are saying maybe this is something that actually does stick. Under surveillance this morning, we're also focused on Washington, D.C. Federal paychecks in jeopardy.
We are now about 1 week away from military service members missing their paycheck.
We'll always take care of our military.
Would you encourage Congress to pass a standalone bill to pay our service members?
Yeah, that probably will happen. We have to worry about it yet. That's a long time. You know what 1 week is for me? An eternity. 1 week for me is a long time. We'll take care of it. Our military is always going to be taken care of.
Here's the latest. President Trump signaling potential plans to pass a standalone bill to pay service members as the government shutdown heads into its 9th day. Bloomberg's Tyler Kendall joins us now. And Tyler, this is serious. The fact that a number of people, including the rank and file of our service members in the United States, are not going to be paid. What is the likelihood that there will be some sort of standalone bill passed?
Right. Well, Lisa, that's why I asked President Trump this question about our service members, because it really gets to the crux of the issue that lawmakers are grappling with, that the longer this shutdown goes on, the more the pressure is going to build. Next Wednesday, October 15th, is the potential date that our service members could miss their first paycheck. However, we have heard from House Speaker Mike Johnson saying that he would not move a standalone piece of legislation that would pay members of the military. We'll see if that changes on the heels of President Trump's comments. But what the House Speaker is doing is that he's really digging in, holding the line for Republicans, that they do not want to negotiate. They do not want to attach any other sort of provisions to the bill that is currently in front of Democrats. They want Democrats to pass that House-approved stopgap measure that would fund the government until mid-November. And that's really the point where we are at. They are adamant that the government needs to reopen before there are any other of these conversations. Now, you heard President Trump there. He did say that it is highly likely that this issue will be resolved, but it's something that we're going to have to watch closely, including what paychecks could look like when it comes to the rest of the federal workforce. President Trump yesterday seemed to be walking the line, saying that the majority of federal workers will receive their back pay, after we did see that OMB memo floated that suggested that they are not entitled to that back pay. And Lisa, that really just goes again to the issue that lawmakers are grappling with. We have seen some solutions floated, including from Senator Susan Collins as one example, that they could explicitly mandate this funding as part of any sort of government funding bill. But again, that would mean changing this stopgap measure. And at this point, we haven't seen any indications from the GOP that that's something they want to do.
Tyler Kendall, thank you so much. As always, it's service members, it's workers in the IRS, it's also food stamps and air traffic controllers. Joining us now, Don Schneider of Piper Sandler. And Don, I want to just start with this idea that you said, which is this is more politics than about negotiating for health care. Can you explain why you say that?
Yeah, I think this goes back to the March funding fight. So basically, House Republicans passed a continuing resolution, a clean bill back in March. Democrats never expected that to happen. They were basically saying they would shut down the government if Republicans and Trump didn't agree to shut down DOGE. Of course, they didn't really have any leverage. That would create way more chaos than DOGE was creating. Schumer, when that clean CR came to him and the Senate faced a binary choice, fund the government or shut it down. He knew it was a losing fight, so he chose to keep the government open. And progressives, his base, kind of realized that's the worst thing you can do, which is not fight President Trump in this environment, not even take a negotiating position or ask for anything. So this time around, it was basically preordained. If Schumer wants to keep his leadership position or wants to stay in the good graces, of the broader caucus, he has to fight. So they made that decision. We are going to shut it down and kind of walk backwards. What is our negotiating position? Now, and that's not to say there aren't legitimate grievances or legitimate policy asks. Democrats do want to extend healthcare tax credits at the end of the year. They do want to stop President Trump from rescinding funding that Congress has already approved. But they aren't really making the fight about that, at least on the rescission side so much. So that's why we are where we are. I think this is probably going to last about 3 weeks or so. I think part of the reason it's going to last so long, maybe even longer than that, Trump has taken a lot of steps that have made this shutdown less painful. We're talking about military pay, for example, and how Trump's going to ensure that they get paid. But if he didn't take steps to ensure they get paid, that would put more pressure on Democrats to ultimately give in and do the right thing, which is to fund the government without any negotiating demands.
Well, Don, there's a ton of talk about military service members, more than 1 million active duty service members that they need to get paid. But I haven't seen a single piece of legislation for them to actually do so. Can the Pentagon just shift funds around? How exactly could this work?
Yeah, so it's about a $5 billion paycheck they get every 2 weeks. I think the Pentagon could do it with basically the budget reconciliation bill gave tens of billions to the military in what's considered mandatory funding. It's not affected by the appropriations process. They could use that to pay for paychecks. I think that's what they would ultimately do. But again, I think Trump wants the credit to say, look, we're not going to hurt the military. We're going to ensure that they get paid. Of course, that makes it easier for Democrats to maintain their position longer. Back in 2013, when we had a full government shutdown, there was a bill that was passed ahead of the shutdown, the Pay Our Military Act, which ensured that the military was indeed funded because, Democrats in that position, Republicans at that time were the ones making demands over, ironically, this exact same issue, defunding Obamacare. And Democrats didn't want to be on the losing side of that. So, yeah, of course, we agree that the military should be paid. Now the roles are reversed. Republicans don't want to be in a position of kind of letting pressure out. If they start agreeing to these rifle shot bills, okay, we're going to pay for WIC or we're going to pay for the military, then you just allow this to drag on much longer. So I understand the House Republican position, which is, don't let any pressure out of the tent, don't amend the CR. But from Trump's perspective, I think he can get some political credit if he's willing to be creative using that mandatory funding to pay for military salaries.
Don, I know the Democrats think that the public is on their side right now, but what's being offered is a clean continuing resolution. At some point, if this drags on, are they going to be the ones that the public starts calling out?
I think so. This is the way it always works out. Funding the government, especially in a clean bill, is the right thing to do. It's something Democrats have always been on the other side on, accusing Republicans you can't use, funding the government, all of these innocent people as hostages, basically, for your partisan demands. The reason, Democrats are in the minority. They're asking for something that is inherently partisan. You don't have the votes for it. You shouldn't hold government services hostage for everybody else for it. So it's a losing position. I think ultimately they will have to capitulate and get nothing to show for it. I think part of the reason they're sitting here longer is because it is exposing some division among Republicans, or at least the lack of a position.
Don Schneider of Piper Sandler, thank you so much. Wonderful insight as always. And don't miss a conversation with Hakeem Jeffries, the House Minority Leader, coming up next hour. Really a key question for them. How far are they willing to go? Coming up this hour, next, former senior White House advisor Amos Hochstein with a breakthrough deal between Israel and Hamas. Plus, Danny Berger with your Morning Movers. We are about 2 hours away from the opening bell. We can see essentially nothing going on in markets after a whole lot going on. 33 record highs in the S&P, 21 record highs in the Nasdaq. I keep repeating that because it's just sort of shocking to me how much of an upward momentum train this is. And of course, futures were slightly flat or slightly down earlier. Now, of course, they're up because what else are they going to do? Meanwhile, in the bond space, also quiescent, which is giving rise to what we're seeing in the stock sphere, especially ahead of that 30-year auction. We've got $22 billion of 30-year bonds being sold at 1 p.m. Eastern and still Yields marginally lower at 4.7%. I'm old enough to remember when people were freaking out about the long end of the yield curve. 2 hours away from the cash open, here are your morning movers with Danny Berger. Danny.
Lisa, there is movement here, at least for the airline stocks. A really solid morning. After about an hour ago, we had earnings from Delta. Delta reporting earnings that showed robust demand for the coming rest of the year and an outperformance in this very quarter. It's because of the premium offering and corporate travel coming back. So the other airlines that have also been moving to premium, be it United or American, also rallying by more than 4% this morning. Elsewhere in these markets, some of the other movers we're looking at for earnings is Pepsi. Little change. It was slightly higher, now up by just 0.5%. It did have a robust showing too. North American sales up 2%. Its namesake Pepsi soda did well, as did Poppy's, the newer, healthier soda that it bought not too long ago. They did also name a new CFO, that CFO coming from Walmart. So another maybe good company to put in their arsenal. Meanwhile, to the upside this morning, it's the rare earth metal companies that are having a big day after China being more strict with their rare earth export licenses. Even if you have trace amounts now, you need to get a license. That comes ahead of a meeting in just weeks between Presidents Trump and Xi. So you're looking at critical metals, for example, up 6.7%, Lisa.
Thank you so much, Danny. And of course, there is speculation. Who else is the U.S. going to potentially take a stake in, especially as the pressure ramps up from China? More on that in just a second. On our radar this morning, Israel and Hamas reaching a deal for the release of all hostages held in Gaza, a major step toward peace. Israel agreeing to the release of jailed Palestinians and allowing aid into Gaza as part of the deal. We're going to be speaking about that coming up. Meanwhile, following on to what Danny just said, China planning to tighten exports of rare earths and related technology. Beijing will require licenses to distribute the items outside of China. The move coming ahead of a high-stakes meeting between President Trump and Xi Jinping later this month. You can look at this as leverage or the attempt to try to get some by China, but it really underscores, and this is the point that you made earlier, Annmarie, I think it's a great point, what the administration is trying to do with taking stakes in specific key companies, in particular the lithium and other metal space.
The U.S. can come out and say, look what China is doing in terms of this chokehold. They own 70% of the global supply when it comes to rare earths. And they're going to use this likely as an excuse to potentially double down on this idea of state capitalism and going after these companies, taking equity stakes in industries that they deem critical from a national security point of view. For China, this is easy. Every time they've used rare earths as a lever of leverage, they've gotten what they wanted out of the negotiating table.
At this point, the fate of the two countries still tied, and that is the lever that people talk about. Meanwhile, Bachelor or Love Island continues. Treasury Secretary Scott Bessent grilling 11 Fed chair candidates as the search for Jay Powell's replacement continues. The Financial Times reporting Bessent asked the contenders, about quantitative easing and their position on interest rates and what their favorite meal is. Meanwhile, turning back to geopolitics, Israel and Hamas agreeing to the first phase of the Trump administration's peace plan. Joining us now is someone who knows this process very well, Amos Hochstein, former senior White House advisor. Amos, thank you so much for being here. What's your take on what we're seeing right now coming out of the Middle East?
Well, it's great to be here, and I think this is a great day. And hostages are going to be coming home. They have spent 2 years in Gaza in hell, and they are coming home today or this weekend, hopefully by Monday. And I think that is a good news story. And I think, credit to the administration, credit to Jared Kushner, who came in to help lead this process and take over some of the negotiations and really bring it to a close. It's also a little bit of sadness that this is something that we could have seen months ago. There was a deal in January that achieved the ceasefire where the female and the older men hostages came home. Phase 2 would have been essentially where we are today. So we have, to me, it's a little bit of a tinge of sadness of these folks could have been home 9 months ago or 8 months ago. Many Palestinians would still be alive. Israeli soldiers, and the horrific condition that Israel has seen over the last many months could have been avoided. But that doesn't take away from the fact that this is a good day.
Who held it up 9 months ago?
Look, I think there was a ceasefire in January. Phase 2 was supposed to start on day 42. And the Israelis they thought they'd get a better deal. And they tried different things of harder pressure on Hamas and so on. I think that ultimately the blockade for a few months and the more severe attacks in Gaza, those didn't work. And I think that the very harsh criticism that has caused an Israeli isolation in the world has really proven to the Israeli government, I think, that they needed a deal. And
how fragile is this deal, though? It is a major breakthrough, but the next question on everyone's mind is, for how long is this going to actually last?
It's the Middle East, so long is always a matter of definition. Look, I think the likely scenario is what's happening now is all the hostages come home, prisoners get released, Israel withdraws to a certain point, and then the day after. But in reality, Hamas is going to be in control now in parts of Gaza because there is no day after. The key component that Israel said in January it could not live with, they're now living with the fact that there is no day after before the withdrawal. So there's a partial withdrawal, which is quite a lot. My guess is it freezes here for a while until Hamas is going to say, I don't want a change of control. Israel's going to say, I'm not withdrawing further. That's so where phase 2 goes, I don't know. But I think that for the interim period or for the midterm, we're probably going to see this subside and not come back to fighting.
Long term, do you think this could be the opening for more stability and expansion of the Abraham Accords in the region?
I think that this does open the door for normalization between Israel and Saudi Arabia. As you know, Brett McGurk, Jake Sullivan, myself had negotiated the normalization between Israel and Saudi Arabia prior and post October 7. So I know the deal's ready. It's done, or near. It could happen. I think Gaza was holding it up. So I think that this paves the pathway to get there. I think that's very possible.
Do you have a sense of where the money is going to come from to rebuild Gaza?
Look, people say the Gulf, right? That's the answer today is where's the AI boom going to be fueled in the United States? The Gulf. Where's Gaza going to be rebuilt? The Gulf. Where's soccer tournaments going to be? The Gulf. F1, the Gulf. So at some point, you know, oil prices may have to go up for all this to be paid for. But
that's a good point.
Look, I think it's going to be a challenge because I don't think that Gulf countries see themselves as a blank check. And they want to make sure there's no corruption. They want to make sure it's paying for a real improvement in Gaza. You have to have a security establishment. Is the government Hamas? Is the government somebody else? Who's going to be the one in charge of distributing the money and doing? There's a lot to be figured out. This was a pretty rushed deal. I think it's a very good that they rushed it, but now there's a lot to figure out.
So we could have introduced you in many different ways. You also work now at TWG, and you are involved in some of these deals in terms of the AI infrastructure and energy and, you know, sort of this investment in the real economy after so many years of the financialization. I just wonder how fully appreciated the rebuild of Gaza, the rebuild of Ukraine, the industrialization of AI is actually being factored into markets right now, even amid the AI boom.
Look, I don't think it is, but I think the market says that's government, that's not us. I think what we have to focus on is how do we build the infrastructure for this new world of AI? And there's going to be a lag. There's a mismatch here between AI companies and technology companies that operate really fast, very aggressively, spending money like we've never seen. And the other side is the infrastructure that has to be built, which are utilities, power companies, power regulators, states, cities, locals who operate very slowly, very methodically, take years to build a supply chain in the energy business that is really constrained. Rare earth minerals and critical minerals and metals that you just talked about, they're critical for all of these as well. And I think the move that China just made is another signal of how vulnerable everything that we're doing is. And so I think there's a lot to focus on. And the market is, I don't know that it's pricing it in, but there's a lot of investment opportunity in if you can figure out how to match the energy piece, the infrastructure piece, and AI.
How far behind do you think the electricity match is with what we are seeing out of these companies when it comes to billions of dollars spent on AI and expanding these data centers?
So part of the problem with financial markets is that we look at where we are today. So if you look at the announcements by a handful of the companies, right? OpenAI or Anthropic or Lambda or xAI, et cetera, Google, Microsoft, that crisis is coming, right? How much power can be built to match that ambition, and what is going to have to give? Either the ambition is going to have to be a little bit smaller, or there's going to have to be a change in the investment towards energy production and the infrastructure to carry it. And that's where the rub is. But that's also where the exciting opportunity is for investment, I think, to put money to work. But it has to be in a smart way because electricity on its own does not yield. I mean, the utilities don't exactly trade at PEs that technology companies trade in. So there's going to have to be some changes to how we do this business. And we're going to have to solve the supply chain piece of it, where, once again, China looms large.
The more you talk, you say the market's not appreciating just how much money is going to have to go into this. They keep thinking the government's going to do it. And the government's strapped on every front because of the fiscal overhangs that we've seen from prior years. I just wonder, are you saying inflation, that prices are going to have to go up of precious metals, that prices are going to have to go up of energy, that goods around the world are going to have to experience this in a way that people are not appreciating?
Well, I think we're not talking about it, but electricity prices are higher today, and they're rising. And at some point, if you have AI companies paying more for electricity, then there's going to be a mismatch between consumer prices and AI prices for electricity. And if you're building more, that costs money, and somebody has to foot the bill. Tariffs are a factor in the supply chain for all of these things, and for steel and for other products that are coming through. So we're already seeing some of those prices coming up. Some think the answer is we're going to take stakes. The state will just become the economy and take 10% of this and 5% of that.
I want to ask you about that because the Biden administration also wasn't immune to using national security as a shield to do industrial policy. But what do you make of this? Outright equity stakes in companies that you deem their resources are necessary to combat China?
Look, I agree with the administration's laser focus on trying to have an industrial policy of sorts, and we were trying to do the same. And this is not about politics. America needs more industrialization because we cannot have critical materials that we need being controlled 98% by China. It's just, you can't. The difference is, I think we need to give the government giving incentives to the industry in the United States to build through tax credits and grants and other things, versus, I don't think we're capitalists at the end of the day. Democrats, Republicans, we are a capitalist country. China is not. So copying China's model of owning the companies is not the answer. China's not a communist country either. It is an autocratic form of capitalism. But that's not what we want here. I think that we should, I worry about too much intervention in the U.S. economy, and I think it's a little bit weird that the Democrat sitting at the table is worried about government intervention in business when it's a Republican administration. So we're living in crazy times. But I do worry about that, and I think that capital markets, the American capital markets, is the envy of the world. That is what we have. That's our secret sauce, and that's taking us from crisis to growth every time. And so I hope we stay with that.
Former senior White House advisor, now TWG Global. Thank you so much, Amos Hochstein. Really wonderful to have you. Let's do it again soon. Right now, let's get you an update on stories elsewhere this morning. Here's a Bloomberg Brief with Yahira Anand. Yahira.
Hi, Lisa. Jimmy Kimmel said his comments about conservative activist Charlie Kirk were intentionally and maliciously characterized.
I didn't think there was a big problem. I just saw it as distortion on the part of some of the right-wing media networks, and I aimed to correct it.
Speaking at the Bloomberg Screen Time conference, Kimmel said his opening monologue on the night he returned to air was not scripted. Sticking with media, Paramount is in talks with Apollo Global Management for a possible bid for Warner Brothers Discovery. People familiar telling Bloomberg the talks have also involved Apollo-owned Legendary Entertainment. Legendary is a partner in many of Warner Brothers' top film franchises. Paramount itself was just taken over in a merger with Skydance Media back in August. And the Yankees season has come to an end as they fell to the Blue Jays 5-2, sending Toronto to the American League Championship Series and sending the Yankees back to the drawing board. Sorry, Annmarie. Elsewhere, the Tigers defeated the Mariners, tying that series at 2 games apiece. And in the National League, the Cubs avoided a sweep with a win over the Brewers, and the Phillies staved off elimination against the Dodgers. That's your Bloomberg Brief, Lisa.
That's just basically bait for Annmarie.
Womp, womp, womp.
Yeah, exactly.
I do know now what it feels like to be a Mets fan. I will say, Toronto Blue Jays, congratulations. I'm getting so many Canadian viewers tuning in to Surveillance and trolling me, telling me to focus on, politics and business and not baseball, but you won the East Division championship, and they are literally pouring themselves with champagne like they won the World Series. It's going to be a bit of a long road ahead for you guys. Just want to say that.
Okay, all right. You can throw all the shade that you want to. All I know is that this is also big business. And right now, Yankees might be worth just a little bit less. But we will talk about that never again. Up next, managing a monetary policy.
I said before, the Fed told us concentrate on maximum employment, concentrate on stable prices, right? Don't concentrate on the political cycle. Don't concentrate on anything outside of those. That's what I think is important.
Sonal Desai of Franklin Templeton joins us next. This is Bloomberg Surveillance. We don't have data, but what we do have is probably more gains in equity markets. Futures are rising just a bit after earlier falling just a touch after 33 record highs on the S&P 500. Meanwhile, in the bond market, a real question, especially at a time of a data vacuum. Under surveillance this morning, managing monetary policy.
I said before, the Fed told us concentrate on maximum employment, concentrate on stable prices, right? Don't concentrate on the political cycle. Don't concentrate on anything outside of those. That's what I think is important. And I think that part of doing that is actually sticking to the Fed's mandates as assigned by the Congress and avoiding mission creep.
Here's the latest. The Fed's struggling to navigate its dual mandate, especially without data. September's meeting minutes highlight, meanwhile, division over inflation concerns that only seems to be growing. Sonal Desai of Franklin Templeton writing this. The awkward reality is that the labor market is still in line with the Fed's target, whereas inflation is not even close and shows no signs of getting there. Sonal joins us now. Sonal, wonderful to have you. Thank you so much for being here. I want to start there. Are you thinking that maybe this is a Fed that is willfully ignoring the inflation side of their mandate at a time where the labor market is really unclear?
So, I wouldn't go as far as that. I would just say that there are things we know and there are things we don't know. One of the things we do know is that inflation is definitely not on target. On the labor market, it's far more unclear, is all I'm saying. And I'm not sure that the Fed can fully ignore what's going on with inflation, which is why I think some of the markets pricing on quantity and speed of rate cuts isn't really a data-based call at all. It's more a call of what the market believes the Fed would like to do and what the market would like the Fed to do, as opposed to that third option is what the Fed should do.
Well, we're in a data vacuum, and it raises this question. What do you do in a data vacuum? Do you just sort of, as you said, spin your wheels and take vacation time? What are you looking at?
I am actually looking at what I've been looking at ever since we got those massive data revisions for the labor market for the whole of the last year. I looked at those revisions, and people were first terrified because, of course, we had created half as many jobs, apparently, than had previously been reported. But what it actually tells you is very little about the strength or weakness of the labor market. It tells you that the U.S. economy is probably more productive than we thought it was, because certainly the earnings reports are real. CFOs can't do surveys to deliver earnings. Those are hard data. That's hard data. So whatever we saw based on earnings reports, tax receipts, these things are real. And as such, all we know is that that level of activity was supported with a different baseline employment level. So right now I continue to look at that, and things like those earnings reports from everyone from airlines to consumer goods companies tell you a little bit about the underlying relative robustness of this economy.
Serious resilience, at least when you look at what's going on in Delta and some other companies reporting earnings. So the Fed doesn't have the economic data coming out of BLS. They have what we're all talking about today. So why are they going to cut at the end of the month?
Because on balance, I'd say they've told us they will cut, and this is a Fed which likes to deliver what it's. I don't know that they will do it this month, by the way. Depending on what we see between now and then, maybe there are other things which come out. We could also see this end. The current shutdown of all data and the shutdown of government could come to an end. But that's not the real point here. everyone has been so focused on the idea of a massive change to the Fed in terms of being an enormously dovish Fed coming in. And what I would say is, I've said it before, we've always had a dovish Fed. We've had a dovish Fed since Paul Volcker. We are not changing the Fed's DNA really over here. So I think it's a little bit of a red herring. And that's the last reason I think the Fed will probably cut. It wants to cut. So,
Earlier this morning, we were speaking with Phil Camporeale of JPMorgan, and he said that he watches the long end of the yield curve. He watches the 10-year and the 30-year to get a sense of how the market is viewing inflation looking forward. And what you've seen is stasis, and you've seen a complete lack of volatility, which speaks to a sense that things are going to be okay and that inflation isn't going to get away from the Fed. How much do you want to push back against that as a market participant and sell long duration?
No, I'm not selling long duration here, but I'm certainly not buying it. Does that make sense? Because I don't think it's a screaming buy at this point, because I think there is genuine uncertainty on the path of inflation, in the sense that if we do get budgetary blowouts, first it appeared the tariffs were which are basically a tax increase, were going to reduce on balance the budget deficit relative to what we thought last year. Now we're talking about giving away some of this tariff revenue as opposed to running a smaller deficit. If that actually happens, we're once more in a situation where actually you have fiscal policy juicing up the economy, and typically that is going to lead to more inflation. So I'm not a seller or a buyer right now, because there is genuine uncertainty as to what happens on the fiscal side.
If you do take what Delta had to say, what Pepsi had to say as not gospel, but the data that we have, which shows a resilience, how much are you buying riskier credit, saying this is a reacceleration and this really has legs?
The difficulty that we all have is that every single asset class is close to historic tights in terms of spreads, et cetera, et cetera. So that is a problem. Having said that, there's a good argument to be made to say that, okay, credit quality is better. We're looking for periodic sell-offs, bouts of volatility. We're seeing precious few of them. But when we do jump in and we try to add to some of the riskier sectors. But again, given what I believe is the underlying strength of the economy, I'm not anticipating a massive spike in defaults. So we're not actively looking to sell credit down here either. I think I've used this before, but aggressively neutral. What can you do?
All I can say, I'm smiling because what we saw on Tuesday was a 0.4% decline on the S&P, and that was a buyable dip. Sonal, Desai of Franklin Templeton. I know we're talking credit, but it's a similar dynamic. Thank you so much. But really, Annmarie, that's what we've seen. People looking for any dip to buy because you can't really make a credible counter argument, even if you hate the valuations.
You hate the valuations, and it makes you uneasy. You think about the late 1990s at the same time. You see the tiniest bit of pullback, and guess what? You go in.
That's the reason why today we are flat. Coming up next hour, don't miss this, Cameron Dawson of NewEdge Wealth. House Minority Leader Hakeem Jeffries will be joining us. Richard Bernstein of RB Advisors and Israeli Ambassador to the UN, Danon. We are going to be watching for any kind of economic data coming from the companies and the corporate earnings calls. This is Bloomberg Surveillance.
The reality is there's a lot for the U.S. equity market to like.
AI has the potential to be the biggest productivity enhancer for the global economy since electricity.
What's different between now and the late 1990s is that day to day, the advancers are beating the decliners.
We're talking so much about AI now, and the market is melting up.
The S&P is just making new highs kind of week on week, and I think that's a little bit cause for concern.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowicz, and Annmarie Hordern.
Good morning. Welcome back to the third hour of Bloomberg Surveillance, 90 minutes away from the opening bell as stocks try to climb, because why not? That's what they do. Adding fuel to this positivity is a deal in the Middle East between Hamas and Israel. And right now we should be talking about jobless claims. They should be a half an hour away, but instead it's Delta Thursday, and Delta has positive signals for the U.S. consumer amid a dearth of other information coming in, Ray, from the U.S. government.
Well, yeah, we're in a data desert as the U.S. government remains shut. And right now, no one's blinking. So unclear when we will actually get the data, because unclear when the U.S. government will actually open. And we'll ask Hakeem Jeffries about that, the minority leader. But when it comes to Delta, what they are seeing is resilience from the U.S. consumer. And you've made this point consistently. It is not just those sitting in premium business or first class. It's also going on in economy. They still see the consumer coming and spending. Our customers financially in a good spot, says the CEO. We're not seeing any pullback in demand, which makes you question why the Federal Reserve potentially is going to cut interest rates yet again.
To build on what you're talking about with Delta, their commentary boosting other airline stocks. So it seems as though this feels more broad-based than just simply a Delta story. I'm looking at American Airlines. Those shares up 4.6% in pre-market trading. United already has had a pretty blockbuster year for its share performance, up another 0.6%. But it speaks to this question of whether we're heading into a reacceleration in the economy or whether we're heading into a soft patch, or whether you can have the same thing at the same time. This idea of the K-shaped that maybe isn't showing up just as much. I do wonder, from the people that we're talking to, what the bigger risk to markets is, a reacceleration or a slowdown amid a real dearth of information and, frankly, very split views.
Very split views, K-shaped economy or the little I, as Peter Cheer describes what's going on right now, where you have the upper end spending and continuously spending, and the lower end is where there is concern. And that is likely also what potentially Fed interest rate cuts could help. What's interesting is we're talking about United, Delta, American. It's going to be really important what the budget carriers have to say. Are those customers still showing up, and are they still flying, and is there demand there?
Yeah, and how much is the likes of Delta and United taking some of the consumer base from the likes of Frontier and JetBlue? Right now in markets, you are seeing futures turning just positive on the S&P. It really been sort of fluctuating between gains and losses all morning after yesterday's 33rd record high for the S&P 500. A bit of dollar strength, and this is something that people are watching, whether we've reached sort of the peak in terms of how much depreciation in the dollar. 10-year yields up just marginally ahead of that. $22 billion in 30-year notes sold today at 1 p.m. Coming up this hour, Cameron Dawson of NewEdge Wealth, as stocks trade near all-time highs yet again. House Minority Leader Hakeem Jeffries of New York, as the government shutdown reaches day 9. And the Israeli ambassador to the United Nations, Danon, with Israel and Hamas agreeing to the first phase of a peace plan. We begin this hour, stocks close to fresh records driven by AI enthusiasm. Cameron Dawson of NewEdge Wealth writing, the U.S. equity market's reliance on AI-related returns is very much being mirrored by the U.S. economy's reliance on AI capex for growth. Cameron joins us now. Cameron, just how leveraged is the dynamism that we've seen in the equity market story to what we're seeing with artificial intelligence?
Yeah, we think it's incredibly important because the phrase always goes that the market is not the economy. But what we have seen is that this economy is starting to mirror a lot more of the market in its concentration and reliance on AI. So we know that AI has been the key source of upside for U.S. equities. But if we look in the second quarter as well, it was the key source of upside for the U.S. economy. And we think we called our fourth quarter outlook circles because it's not just the circular reference and financing of what's going on within AI, but the fact that you now have AI driving the U.S. economy and U.S. markets, and U.S. markets are also driving the U.S. consumer because you have the top income consumers being the key source of upside for growth. And so this whole circular reference means that if the AI story gets questioned, then the whole thing probably starts to slow down. But for now, we're not seeing that AI story get questioned whatsoever.
Well, this is the issue. What do you do if there is something that feels frothy? Do you flee or do you get along for the ride? Because it could be a long ride. And right now, especially with what we saw overnight from TSMC, it seems like it's real. It's not just a sort of fictitious nonprofit company from the 2000s.
Dance while the music is playing, right? So we're still in a very momentum-driven market. We're still in a market that does have a fundamental underpinning because you're seeing upward earnings revisions. The questions will start to mount as we get into 2026. If we start 2026, let's say we get to 7,000, you'll be trading at an incredibly high valuation. You'll be trading at 23.5 times 2026 numbers. You'll likely have positioning that gets very extended. You'll likely be in a place where sentiment gets even more extended if we get to that level, as we saw this morning with AAII starting to bounce up. So all of that sets up for a tougher potential start to 2026 unless we get the scenario where we're singing "Let's Go Crazy" and party like it's 1999, and you start seeing this chase even further into markets, which could happen. But as we know, trees don't go to the sky. So bubbles have the same risk as they melt up that they could melt down. But again, respect the momentum.
What's the catalyst for a meltdown? Is it just going to be seeing whether or not these companies can deliver on earnings?
I think the other important factor, it's not just the earnings side of things, but we have to appreciate how important liquidity has been for this market. Liquidity is the reason why you can trade right now at 22.9 times forward. If liquidity starts to recede, we're watching things like Treasury funding, how that interacts with money markets as the Fed is cutting interest rates. If liquidity becomes less supportive for this market, then even if the AI narrative continues, it might challenge the fact that we look around and say everything is extraordinarily expensive. But if Treasury pulls out all the stops and Fed pulls out all the stops to keep liquidity abundant, don't be surprised if we continue to get further and further into this valuation rarefied air.
You talk about in your note feeding the flames because we can't let go. Shout out Post Malone. You're talking about AI, but isn't the Fed just going to be feeding these flames into 2026?
Yeah, we think that the Fed, the new Fed, very different than this old Fed. Old Fed balance between employment and inflation. New Fed is cutting to 3% no matter what. Meaning that even if you see this inflation stay sticky, we think that that Fed is going to be cutting rates. The question is, what is the consequence of that? What happens to long-term interest rates in that environment? It is absolutely incredible that inflation break-evens and five-year forward inflation swaps remain subdued. They remain well below where they were in 2022, which just means that this bond market still believes that the Fed, the new Fed, is going to tame inflation. I think that remains to be seen.
Yeah, but how can you bet against that with the liquidity that you're talking about? What we saw yesterday, the 10-year auction, it went fine. There was plenty of demand. Today, ahead of that 30-year auction, I remember when people were really worried about 30-year bonds. Now people are buying the 30-year note before this auction. So how do you make a bet on what you're talking about, given what we're seeing in markets?
I think it's a whites of the eyes until you start to see signs that there's funding stress, and it's likely funding stress at the short end. Mistakes happen at funding in the short end, meaning that you have some kind of issues with Treasury funding, with bills potentially as we get into 2026. That is something that we'll have to watch for. But for now, liquidity remains hyper abundant. So woe is the person who's trying to bet against it.
And this is the reason why it's been such a difficult market to really understand exactly how we're fast forwarding. If people really believe in the innovation of the United States and they believe that there is a Fed that is going to cut to 3%, is that why, and are you buying gold?
Yeah. Well, I think gold is such an encapsulation of all these different fears. It's not just the side of things that we know central banks are buying gold because of the weaponization of the dollar post the Russian invasion of Ukraine. We know that that bid is there. But gold is a way for you to express fears about what's going on within dollar debasement, fiscal dominance, not just in the U.S., but around the world. Now, we call gold a psychological commodity because it's not necessarily the actual event happening. The debasement doesn't have to happen. It's the fear of it happening that drives demand for gold. Very similar to things like Bitcoin, but Bitcoin adds the factor of liquidity. You have to have abundant liquidity for Bitcoin to do well, even if those fears remain. So I think tactically, gold is overbought, but it has been overbought for quite some time. So the trend is up, and don't fight the trend.
So are you just aggressively bullish and feeling very nervous?
Respect the trend, but don't ignore the risk. Yes. Look, so our positioning, we're suggesting, we're calling it the me, myself, and Irene portfolio. Be optimistic, stay invested, respect the fact that there's tech optimism happening. Be pessimistic. Understand that we're probably not pricing in potential risks, and then be nihilistic. Look for things in portfolios that don't care about the Fed, that don't care about what's going on within equity markets, uncorrelated assets.
Like
things.
What?
So talking about things like infrastructure, for example, so not necessarily reliant on public markets, don't have high correlations. Looking at overall uncorrelated assets, things, very esoteric things like water rights and litigation finance, things that are outside of this market and don't rely on it, and are great building blocks for portfolios to provide that diversification.
How is anything, though, not correlated to what's going on in Washington, D.C. when it comes to things like regulation, a tighter regulation portfolio under Biden with this deregulation boost from Trump?
Yeah, I think that is a fair point, that the deregulation boost is a rising tide that lifts all boats. But we still have 3 more years of a deregulatory push potentially before we get into the next election. So if that happens to be a tailwind, then certainly something that can impact all assets.
So besides industrials, what else potentially could be nihilistic?
Yeah. Well, infrastructure specifically. We think that building things like real assets into portfolios also allow you to have that benefit of not necessarily relying on what's going on within public equity markets. And having some defensiveness within portfolios makes sense, taking advantage of some of the disruptions we've seen in things like muni markets as well provides some opportunity.
Meanwhile, we did see the Delta earnings. We saw PepsiCo earnings. Does that make you a little bit more confident in consumer cyclicals?
I think Delta is the perfect encapsulation of what we've seen over the course of the last 9 months in markets, which is, oh my gosh, I'm so afraid. I'm going to cut earnings estimates because of tariffs. Oh, wait, it's not that bad. Everything is fine. And now, oh, things are actually potentially reaccelerating. And so it's something that if we continue to hear that reflected in other earnings reports as we get through the next few weeks, that could suggest that maybe there's some more upside to not just 2025 numbers, but 2026 numbers. And our golden rule has been if 12-month forward earnings estimates are making new highs, so will the market.
There is a real question here about whether we can see a jobless recovery, right? Whether we could see some of these stocks do really well, the biggest players continue to consolidate their market share, and still see a lot of people left behind. How do you play that? I mean, I know that sounds like a sociological issue, and we could write a sociology paper about it, and plenty of people are, and this is definitely feeding into politics, and we'll get to that in just a second. But there is this feeling that you have to account for that when buying and selling. So how are you navigating that?
The decoupling that you're seeing between growth in the employment market is the encapsulation of that. The fact that you have capex intentions surging and you have employment intentions starting to fall, that suggests that you're having this environment where you could have a jobless recovery. And I think the challenge that we have is when we look at aggregate data, everything looks okay. But the bottom 60% of the US economy of consumers is really, really struggling. And it's starting to show up in things like the New York election. It's starting to likely show up in things, probably local elections as we get into midterms, is that you can't ignore, and this is what 2016 taught us, you can't ignore the bottom 60% of the overall economy. It may not show up in the data aggregate because the top 10% are generating 50% of consumption, but the reality is that bottom 60% are voters as well.
Cameron Dawson. Wonderful to have you, as always. Cameron Dawson of NewEdge Wealth here in New York. Right now, let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Yahaira Anand. Yahaira.
Hi, Lisa. Argentina's economic crisis is escalating as short-term interest rates soared Wednesday. President Javier Milei's government has been intervening on several fronts to stave off a devaluation, but the interventions are making the exchange rate stability look increasingly unsustainable. Meanwhile, the United Nations will begin slashing its peacekeeping force and operations as a result of U.S. funding cuts, according to a senior UN official. The official, who spoke on condition of anonymity, noted the 25% reduction in peacekeepers worldwide will mean roughly 13 to 14,000 personnel out of 50,000 will be sent back to their home countries. And President Donald Trump will undergo a physical exam tomorrow following mounting questions about his health, prompted by swollen ankles and a persistent bruise on his right hand over the last few months. The White House described the visit as his regular yearly physical, but the 79-year-old president had an annual exam just 6 months ago. That's your Bloomberg Brief. Lisa?
Thank you so much, Yahaira. Up next, House Minority Leader Hakeem Jeffries of New York as the government shutdown reaches day 9. That's next. This is Bloomberg Surveillance.
It has always been my understanding that the law requires furloughed workers to receive back pay, and of course that's been the tradition. And I'm not sure exactly what the president is referring to there. I haven't had a chance to talk to him about that specific issue yet, but we will. I can tell you this, though. The view of the White House, the view of the president himself, is that he doesn't want federal workers to be used as pawns here.
That was House Speaker Mike Johnson last night. Good morning. We are seeing futures shrug off worries about a government shutdown, even as we get to day 9 of the closures, sticking with the shutdown as tensions are rising on Capitol Hill. House Minority Leader Hakeem Jeffries of New York is confident a spending bill can pass, but says Republicans must first address what he calls a health care crisis. House Leader Jeffries joins us now. Congressman, thank you so much for being with us. House Leader, I want to just start with whether you feel confident that you can complete some sort of agreement in the next few days. Do you have a time frame as these discussions do continue?
Well, good morning. Great to be with you. You know, as Democrats, we've repeatedly made clear we will sit down anytime, any place with anyone, either here at Capitol Hill or back at the White House, in order to reopen the government, to enact a spending bill that actually meets the needs of the American people as opposed to hurting everyday Americans. And of course, that spending bill must decisively address the Republican health care crisis that is hurting working class Americans and middle class Americans all throughout the country, including as it relates to the urgent need to reauthorize and extend the Affordable Care Act tax credits.
Well, the Speaker told us yesterday that Congress is having these talks when it comes to subsidies reform. Are you part of these talks? And just a quick condolences, because I know you, like me, were up late watching the Yankees lose, and I know you're a huge fan, Minority Leader Jeffries.
Well, thank you. They had a great season. Unfortunately, it didn't end the way that we expected, but on to next year. With respect to, what the Speaker has indicated, there's been no conversation between House Republicans and House Democrats, or between the Republican Party, Donald Trump, the administration, and any of us on Capitol Hill, including conversations that should be taking place with Leader Schumer and Senate Democrats since that White House meeting that occurred last Monday. That's unfortunate. And the behavior of Republicans since that point in time has been unserious and erratic. And we continue to urge them to find a path forward, to sit down, let's talk, exercise common sense on behalf of the American people. But anything that's done has to address this urgent need. The open enrollment period starts on November 1st. Over the next few weeks, tens of millions of Americans are going to receive notices indicating that their premiums, copays, and deductibles are about to skyrocket, in many instances by thousands of dollars per year. People are going to go without health insurance, face medical bankruptcy, and be jammed up in a situation where they need care for themselves, their children, and their families, but will be unable to access it because they'll be without health insurance.
It was a Democratic policy, though. Your party voted for this temporary subsidy increase. Do you regret having an expiration date on this?
No. We were able to extend it through the end of this year in full anticipation that any reasonable member of Congress will understand that you cannot kick tens of millions of Americans off of health care that's become affordable for them as a result of the tax credits. Unfortunately, Republicans chose earlier this year to pass their one big ugly bill, largest cut to Medicaid in American history, ripped food away from the mouths of hungry children and seniors and veterans, and they did all of this to pay for massive tax breaks that they made permanent for their billionaire donors, while at the same time refusing to extend the Affordable Care Act tax credits, which is why we find ourselves in this situation right now.
Leader Jeffries, some people would argue that what the Republicans are offering is to have a clean continuing resolution and to continue negotiating this, given the fact that at the same time there are going to be service members who are not going to be paid. There's going to be a question around food stamps and whether they're going to be funded. Air traffic controllers are calling out sick because they're not receiving paychecks. At what point do you just say, look, we need to keep people getting paid and we can keep talking?
We want to reopen the government and we want to reopen it immediately. But we also need to enact a spending agreement that actually improves the quality of life of the American people as opposed to hurting everyday Americans, which Republicans have been doing all throughout this year. And they've refused to negotiate at every step of the way throughout this year. They've taken a my way or the highway approach. They've gone it alone. And now we find ourselves dealing with this mess of this Republican healthcare crisis, and time has run out.
Leader Jeffries, do you think that you've gotten more leverage as this process has gone on, or do you think that it's actually waning?
Well, it's actually not about leverage for us. It's about the American people. That's the fight that we're waging, particularly in an environment where the cost of living is way too high. People are already paying too much for groceries, for housing, for their electricity bills, and now, of course, they're confronting the very real possibility of being bankrupted by the rising costs of their health insurance. So we're just asking Republicans to sit down and negotiate. That's what should take place, not simply a my way or the highway approach, particularly when they're asking Democrats to support a partisan Republican spending bill that continues to gut the health care of the American people.
But right now, Republicans are asking is to support a clean continuing resolution, a stopgap funding measure, which we've seen time and time again, that Democrats also wanted Republicans to support in the past. Why are Democrats choosing to keep the government shut?
That's a Republican talking point, unfortunately, that they are putting into the public domain. It's not a clean continuing resolution.
Why isn't it
clean? In March, well, I'd be happy to explain that. In March, the Republicans passed a partisan bill in the House that Democrats strongly opposed. We opposed that spending bill because it hurt veterans, hurt children and families, it hurt housing affordability, and it hurt health care because of the cuts that were included in it. There was actually a bipartisan spending agreement that we reached last December that passed overwhelmingly in the House and in the Senate. It was signed into law by President Joe Biden, and it had the support of then President-elect Donald Trump. That would have been a clean spending agreement that could have been put before the Congress. Instead, they passed this partisan Republican spending bill in March that we strongly opposed. And now they want us to continue to sign off on that particular bill that also includes $500 million in cuts to law enforcement grants to support police officers all across the country. That's just not something, for a variety of reasons, we can support at this particular point in time.
Do you think the Democratic Party could commit to broader reforms when it comes to the Affordable Care Act and keeping less of the subsidies? Could this be potential off-ramp for a deal?
I think that our view, certainly in the House, is that we will evaluate in good faith any bipartisan proposal that is sent over to us from the Senate if it decisively addresses the Republican health care crisis with respect to the Affordable Care Act tax credits extensions or any other issues that may be put on the table because of the enormity of the attack on the health care of the American people that Republicans have waged this year. It's got to be meaningful. It's got to actually improve the lives of the American people. But unlike Republicans who have adopted this my way or the highway approach, we are actually willing to sit down and evaluate in good faith anything that could advance the ball here for working class Americans, middle class Americans, and everyday Americans.
Is there an opportunity for standalone legislation to make sure that the more than 1 million active duty service members get paid next week?
Certainly, our view in the House is that we should stand by our men and women in uniform and make sure that they do not miss a paycheck. Unfortunately, Speaker Johnson has ruled that out, saying it's not really an issue that he's prepared to deal with, in part because Republicans canceled votes last week, canceled votes this week. Apparently, they may not be coming back next week. And what is that all for? Why are they on vacation in the middle of a government shutdown, particularly as it relates to the real possibility that our military families might miss a paycheck that they cannot afford to miss? We're urging Republicans to get back into town. Allow us to deal with the military pay issue, allow us to deal with the Republican health care crisis, and allow us to reopen the government so we can enact a spending agreement that meets the needs of the American people.
Leader Jeffries, we also saw a pretty explosive argument between you and fellow New York Congressman Mike Lawler, and then you proceeded to call Lawler an embarrassment on television. Was this fight representative of the state tensions that are going on within the Republican Party in New York State right now?
Well, MAGA Mike Lawler is an irrelevant individual. He's a clout chaser, and he was stalking the Democratic leadership press conference in ways that are unhinged. And, you know, at the end of the day, our view is the people who need to sit down and have the conversation with us, Republican leadership in the House And in the Senate, the Trump administration, including the president or the vice president or anyone that they designate, are the ones who are ultimately going to determine how we can find a bipartisan path out of it. And we look forward to having those conversations. But unfortunately, Republicans to date have declined to do that.
Well, what was he doing that you deem unhinged? And have you spoken to him since? Have tensions cooled? It doesn't sound like they have.
He's an irrelevant individual, and as I indicated, his behavior clearly speaks for itself. Complete and total embarrassment as a description was a polite use of words.
Leader, there's a question here about how difficult it is to unify the Democratic Party because, this is somebody who is a Republican. He's not relevant in his district. And there is a question here, especially in New York, how to get some sort of cohesive message as a Democrat. I'm just wondering from your perspective, especially as it relates to the Democratic mayoral race in New York City, you haven't endorsed Zohran Mamdani. How difficult is it to get sort of a leadership view of where the Democratic Party is going to go?
Well, listen, as Democrats, what unites us is that we believe in a strong floor and no ceiling. At the end of the day, in America, you work hard, you play by the rules. There should be no ceiling to your success in terms of what you can achieve for yourself, for your family, and for your children. At the same point in time, we also believe that in this great country, the wealthiest country in the history of the world, that we need a strong floor. That strong floor includes Social Security and Medicare, Medicaid, supplemental nutritional assistance, veterans benefits, and of course the Affordable Care Act. And what unites Democrats at this particular point in time is the fact that Republicans are assaulting the floor that we should have for everyday Americans, while at the same time rewarding their billionaire donors. And by the way, in doing so, skyrocketing the debt by more than $3 trillion in such a fiscally irresponsible fashion.
Leader Jeffries, you did tell reporters last month you plan to address the mayor race in New York soon. Do you have a plan to endorse Zohran Mamdani?
We're in the middle of a government shutdown. People are being hurt all across the country because Trump and Republicans decided to shut down the government rather than provide health care to working class Americans. And so what I've indicated, particularly most recently, when Mayor Adams decided that he wouldn't seek re-election, is that I will have more to say about the mayor's race in advance of early voting in New York City, which begins at the end of this month.
House Minority Leader Hakeem Jeffries, thank you so much for your time. And we hope to get progress soon. Really interesting to see how this debate evolves as we are in day 9 of the government shutdown.
It is clear the Democratic Party is looking at some of the polling, and they do see that at the moment they are winning the race a little bit. It's really on the margins. But the longer this is prolonged, they may be pushed to sign up, which we've seen Republicans have to do in the past, which is to a clean, continuing resolution to keep the government open and then keep the discussions that they want to have about extensive subsidies when it comes to the Affordable Care Act and other issues remainder once the government is open. When it comes to Zohran Mamdani, he continuously says he's going to address it, but he's getting a lot of pushback, the fact that he has yet to decide who he is going to endorse for the mayoral candidate.
Yeah, there's a real question about exactly whether the Socialist Democrat kind of view of the world can take front and center with a number of the Democratic leaders. Meanwhile, Marc is looking past all of this, seeing basically fluctuating between gains and losses on the S&P after 33 record highs on that index, 31 record highs on the NASDAQ. What you are seeing is this positivity as the innovation side of the U.S. economy does continue to chug forward 1 hour away from the cash open. Here are your morning movers with Danny Berger. Danny.
Hey, Lisa. Copper stocks having a really good morning, up 3% for Freeport-McMoRan and then Southern Copper. Those shares up 3.3%. With the metal itself trading around records, China's come back from their week-long holiday, so you're seeing buying there. So the asset itself is doing really well. Also, some supply concerns with various disruptions means that copper is doing well. I should say silver, gold, all of the metals having a really stellar morning. Meanwhile, the airlines also having a stellar morning. Earlier this morning, Delta reporting earnings where they saw a very strong demand to come for the rest of the year and a third quarter that beat expectations. It's because of premium travel and corporate travel. So Delta up 7%, United and American also rising in sympathy with those shares this morning. Also, Lisa, to your point of the innovation economy still leading us here, it is NVIDIA up another 2% this morning. With late yesterday, we reported that NVIDIA has gotten export licenses to the UAE. This is back from an agreement that was struck between the U.S. and the UAE back in May about the UAE making similar investments into the U.S. and then getting chips on the other side of that. So there you go. Shares up 2%, Lisa.
Thank you so much, Danny. And we also saw TSMC with a positive earnings report suggesting that the AI discussion and demand continues to rise even as smartphones still have lagged behind for it now. Turning back to the broader markets as stocks trade near all-time highs. Richard Bernstein of RB Advisors writing, markets are in some sort of speculative fervor. It is very obvious that investors are not risk averse. Richard joins us now. It's probably an understatement, Richard. I am curious whether you think it's gone too far or do you get on the train and follow momentum?
So, Lisa, good morning. It's great to be with you. I think the problem with being a momentum investor is never trying to figure out, should we get on the train? I mean, that's easy. You can see what's going on. The key to momentum investing is knowing when to sell and when to get off, right? Like who sold technology stocks at the peak of the bubble in March of 2000? That would be the perfect momentum investor. And we know from history that people are very bad sellers. And so I think what the speculative environment really shows is that the most important part of a portfolio right now is diversification. You may want to play momentum, but don't overplay momentum.
To just underscore what you're saying, are you selling tech stocks right now?
So we have been famous or infamous for not overweighting them. So I don't think we have to sell anything because we're not overweight. I think what we've done, though, what we've done very effectively in our portfolios is find other areas that people are ignoring that are performing quite well. You know, whether that be non-U.S. quality, whether that be dividends, whether that be small and mid-cap industrials. I think there's lots of different things that have been performing well that are way off of people's radars.
But when it comes to historically how it's difficult for individuals to sell during all of this momentum, what are you looking at that would give you the signs that potentially this could be the meltdown?
So I think, you know, like if you want to look for a risk, I think the risk to look for right now is, can the Fed cut rates as much as the market is presently anticipating and as much as investors are presently anticipating? And the reason I say that is that people forget that the Fed is the central bank, and that is the key word, bank, and that the way they impart monetary policy is through the banking system. So if the banking system is hesitant to lend, then the Fed cuts rates to try and make the cost of funding cheaper for banks to encourage lending. If the banking sector is lending too much and the economy is overheating, the Fed will raise interest rates to try to increase the cost of funding to slow down lending, which in turn will slow the economy. So the question we should all be asking right now, and the question the Fed should be asking, is where is the hiccup in the financial sector that is constraining lending, which is constraining growth? I think that's very hard to find right now.
Well, if there isn't one, then do you think the Fed should be cutting it all the rest of the year?
I don't look. I can't tell you whether they should or they shouldn't. It's not like Jay Powell's calling me up and asking me, Rich, should I cut rates? So what I think they should do may be irrelevant. I think what's important is for investors to think about that risk and to think about what the outcomes could be. And what I was saying before, you know, that you may want to be better diversified than you were a month ago or 2 months ago, or certainly 6 months ago. And I think that's the way to think about what's going on here. I think it's going to be more difficult for the Fed to cut rates than they think right now, and certainly more difficult than the markets think right now.
You've been in the market a long time, Richard. One thing that's been very interesting to me is how much the idea of diversification has shifted over the past 5 years. And I just wonder, when you say diversify, how much that has a different meaning today than, say, the 60-40 portfolio of yore.
Oh, absolutely. And I think part of that, Lisa, is that the 60% portfolio, you know, your stock portfolio has turned out to be like 7 or 10 or 20 stocks. And so how much diversification do you even get just by going 60-40? I think that's right. I think one has to should be looking at things like commodities, should be looking at various alternative investments with the reasoning that alts is not a real category. Like everybody likes to say alternatives. That's kind of silly. That's like kind of saying I want to be invested. There are different kinds of alts that have different goals and different things like that. And I think it's worth looking at some of that. But I don't think one should be saying there's only 7 growth stories in the world. That seems silly to me.
Do you think that there is a story to play? And I keep thinking about what Amos Hochstein had to say, former White House senior advisor, as well as a player now in the space of infrastructure with energy and AI. I just wonder how much the market has fully appreciated how much investment has to go into infrastructure and the real economy. Certainly that is a very hot area in private markets. Do you see ways to get into that kind of idea in public markets or beyond that haven't fully been tapped?
So Lisa, I think the best long-term investment story is all about small and mid-cap industrial companies and the reindustrialization of the United States and the infrastructure that has to go along with that. One of the things that people have talked a lot about is the price of electricity. And I don't know if you're aware, but in the last 5 years, we have had the biggest run-up in electricity prices in modern American history. They're up nationwide by like 80% in the last 5 years. This has become, for those of you who live in New York, New Jersey, this has become a big issue in the New Jersey gubernatorial election. They're talking about electricity prices. Well, the thing that people always forget is that bubbles misallocate capital, and in doing so, they are inflationary. And I think electricity prices are a classic one, where we're building out data centers before the infrastructure is built. That's like building factories before the roads are built to move the stuff in and out from the factory. It's silly to think that way. And here's a good way to think about this misallocation of capital that's going on in the economy that is so inflationary. Imagine if all the capital that was going into cryptocurrencies instead was invested in the U.S. electric grid. Would we be having electricity prices up by the most in modern American history? I don't think so.
So are you buying electric grid related stocks? Is that sort of what you're saying?
Well,
that's where it needs to go?
Well, that has been a sub-theme of ours for like a decade. There's nothing new for those of us at RBA. I mean, the notion of small and mid-cap industrial companies includes, things like the grid, includes all this kind of, industrial infrastructure type stuff. So, I always say to people, imagine if you go to a cocktail party and you didn't talk about NVIDIA, but you tried to get people interested in carbon wire. I think you'd be the skunk at the cocktail party.
It would go back to the graduate plastics. Really enjoy that, right? This copper wire. I am just curious going forward, how much signal you take from the likes of Delta and Pepsi earnings coming out better than expected. Delta in particular talking about how travel is accelerating, not just at the front of the cabin, but more broadly, even in the economy sections. How much do you take that as the economic data to hinge your head on and sort of bet on, even if you're diversified, the ongoing momentum in this economy?
Oh, well, there's no question, Lisa, about is the economy healthy, right? I mean, the Atlanta Fed's GDP now is tracking, if I'm not mistaken, at roughly about 3.5% to 4%. I mean, that's pretty good growth by U.S. standards, I would say. So there should be no doubt that the economy is healthy. I mean, we could argue about whether that's evenly divided among the economy and how that's, what parts of the economy are healthy, but the general economy is actually quite healthy. And if you think about nominal growth, you think about the 3.5% to 4% real growth, plus you think about, we could argue, let's say 3 to 4% inflation, depending on how you're measuring it. We're talking, 6 to 7% nominal growth. I mean, that's a pretty strong environment, and that's one of the reasons why I think people are overestimating the ability of the Fed to cut rates going forward. 7% nominal growth. I mean, that's pretty strong growth.
Richard Bernstein, you're welcome at my parties anytime. Richard Bernstein of RB Advisors, thank you so much for being with us. Right now, let's get you an update on stories elsewhere this morning. Here's your Bloomberg Brief with Yahira Anand. Yahira.
Hi, Lisa. A Florida man was arrested accused of intentionally starting the devastating and deadly Palisades fire in Southern California. Jonathan Rinderknecht is charged with maliciously setting the fire on New Year's Day. The Palisades fire killed 12 people and destroyed thousands of homes in the Pacific Coast area of Los Angeles. Meanwhile, the IRS said that it was furloughing nearly half of its workforce due to the ongoing government shutdown. About 34,000 workers will be furloughed, and the remaining 39,870 staff will continue managing the agency. In a letter, the IRS said furloughed workers would be paid after the shutdown ends. And in sports, the Las Vegas Aces are on the brink of a WNBA title after pulling ahead to a 3-0 series lead against the Phoenix Mercury. Four-time league MVP Asia Wilson sealed the Game 3 win for the Aces, scoring 34 points and hitting the game-winning shot in the final second. Game 4 tips off tomorrow night at 8 p.m. Eastern in Phoenix. That's your Bloomberg Brief. Lisa.
Thank you so much, Yahira. And Annmarie, thanks you for not mentioning the Yankees once again. Up next, setting you up for the day ahead, plus the Israeli ambassador to the United Nations, Danon, as Israel and Hamas have agreed to the first phase of a peace plan. This is Bloomberg Surveillance.
We've repeatedly made clear we will sit down anytime, any place with anyone. There's been no conversation between House Republicans and House Democrats or between the Republican Party, Donald Trump, the administration, and any of us on Capitol Hill, including conversations that should be taking place with Leader Schumer and Senate Democrats.
That was House Minority Leader Hakeem Jeffries talking about the government shutdown that is in day 9. And based on that conversation, it looks like probably we're not going to get a resolution anytime that soon.
Doesn't look like. He was not prepared to blink. He did say that Democrats will evaluate in good faith any plan addressing the Affordable Care Act. But we do have to remember, it is a clean resolution that is in front of them. They've had issues in the past with the Republican Party on prior spending bills, but this is a clean resolution to keep the government open. And right now, polling may be doing well, but if this becomes prolonged and protracted, that is going to affect not just Republicans, but also the Democratic Party.
Stocks stopped caring. They actually don't think they ever really did care. And right now you do see a bit of a lift to the S&P after 33 record highs so far this year. A bond yield's up just a touch ahead of that $22 billion 30-year auction. Crude prices basically flat, cutting down to that opening bell. Here's the trading diary for the rest of the week. 11 a.m. Eastern, President Trump hosts a cabinet meeting. 1 p.m. Eastern, that 30-year Treasury auction. Also today, another round of Fed speak. Friday, we get the University of Michigan Consumer Sentiment Survey at a time where we don't get much of anything else. Next week, more key economic data that probably will not come out based on that conversation that we had with Hakeem Jeffries. Wednesday, we get the CPI data. Probably not. Thursday, PPI and retail sales. And another round of jobless claims, potentially, if that is what we get. Turning back to one of our biggest stories today, Israel and Hamas reaching a deal to release all of the hostages in Gaza. President Trump saying he expects the hostages to be released probably on Monday. Joining us now is Danon, Israel's ambassador to the United Nations. Ambassador Danon, I'd love to get your sense of what the mood is like in Israel and why it has taken up to this point that really got this deal together and really changed the tone.
Good morning, Lisa. Thank you for having me. Indeed, today in Israel, all around the world, we are very hopeful. We have been waiting for this day for 2 years. We prayed for the release of the hostages, and we were very determined. And we said it very clear, this war will not end until we get all the hostages out. And I think that determination brought us to the position where we are today. And we want to thank President Trump and Prime Minister Netanyahu for their leadership. It's only the beginning. It's only the first stage. The government will decide in 2 hours about releasing terrorists, which is painful for us. And then we will start to see, hopefully, the hostages coming back home. That's the most important phase, but it's not the last one. We have to speak about the future, the demilitarization of Gaza, ensuring that Hamas will not be part of the process over there. So it is a long way ahead, but we are very hopeful and happy today to think about the hostages finally reuniting with their families.
Ambassador, is it your understanding that President Trump is going to travel to Israel and address the Knesset?
Yes, we expect President Trump to arrive to Israel late Saturday night or Sunday. It will be his first visit during this term. And I think for him it's very important. He was very involved with the issue of the hostages. He met with the families. He asked about their medical conditions. And we have to give him credit for that. And it speaks volume that he comes to the region. And we have to be thankful not only to his leadership, but the fact that now we can speak about expanding the Abraham Accords. After we will finish this war, Israel is a peaceful nation. We want to build bridges. We want to sign more peace accords. And I think today, when President Trump is in the White House and Netanyahu in Jerusalem, we can start exploring the opportunities.
When it comes to the first phase of this peace agreement, where exactly do you see the line where the IDF will withdraw to?
Well, that was negotiated. We made some compromises over that issue on the last days. Basically, we're going to pull out from the cities. And we have no intention to stay in Gaza. We don't want to be there. And we intend to pull out completely. But it will happen gradually when we will see that actually Hamas is giving away its grip of the Gazans and allowing international forces to take over. We care about our security. That was the reason we moved into Gaza.
You're the ambassador to the United Nations, where a number of world leaders walked out when Netanyahu was speaking just a couple of weeks ago. I'm just wondering how difficult you think it's going to be to repair Israel's relationship with the rest of the world, given some of the animosity that we've seen of late.
I think we will do it very fast. We have strong relationship with so many countries. Many of them, made mistakes. We saw the difference between politics and diplomacy. Some leaders like Macron and others came to the UN for the show, for the declarations. President Trump and Prime Minister Netanyahu dealt with hardcore diplomacy and brought results. So I'm sure that very fast we will be able to work with those countries, continue to contribute to developing countries. We have a lot to do, a lot to share. We paid a heavy price, and I have to mention the price we paid. More than 1,000 soldiers died since October 7th. It's painful for us, but we are strong and we prevailed.
Ambassador, I'm also wondering about whether there have been any discussions to restart talks to normalize relations between Israel and some of your other Middle East neighbors. I'm thinking of Saudi Arabia, where that was clearly a discussion before this, but others as well. Is that already on the table, or is that a long ways off?
We definitely expect it to happen. First we have to stabilize the situation to make sure that actually Hamas is out of the game. It's not a given. We have to make sure that they are out of the game. And I think it will be the interest of Israel, the US, and many moderate countries to move forward. And it's important to mention that, the Abraham Accords countries sticks to the peace agreement we signed with them, even though it was challenging and difficult for them during the war, and we appreciate that.
Are you concerned with a fragile relationship with Egypt? Earlier in September, we had President el-Sisi talk about the fact that Israel was a, quote, enemy. We've seen a lot of acrimonious statements and individuals saying it's almost the closest these two countries have been to war since 1979.
No, we have a strong bond with the Egyptian government. We know that during the war, they had domestic politics, some of those leaders, and they had to play the game. But we collaborate with the Egyptians, and I think now we should aim to expanding peace. That's our goal in the future.
Well, when it comes to Egypt and Qatar and United Arab Emirates, which you already have a peace agreement with, how do you see these countries working with Israel when it comes to phase 2 and 3 of rebuilding Gaza?
Well, I think it will be more than that. It will require the involvement of more countries, and I cannot name names, but we are talking with major players that are willing to contribute to the efforts for the reconstruction of Gaza. And it's not only physical reconstruction. We have to build the environment, a society that will not glorify terrorism. For 20 years, Hamas took the people of Gaza hostage. And I think now they have the option to build a better future. And they have to be responsible about it and not allow radicals to take over Gaza again.
Danon, Israel's ambassador to the United Nations, thank you for taking the time. Right now, we are ahead of markets digesting that agreement that happened overnight with Israel and Hamas. Also looking ahead to the economic data that we are getting, which is coming from the corporate earnings stories more than anything else. The latest Delta, and it really is Delta Thursday on a day when we aren't getting jobless claims. A really robust picture. And Annmarie, you pointed this out, and I thought that it was a really good point, that CEO Ed Bastian said our customer is financially in a good spot. We're not seeing any pullback in demand. He was talking about corporate. He was also talking about consumer across the income spectrums.
Yeah, this is pretty incredible given the fact that actually they were waving the alarm a little bit, a number of airlines, that potentially the lower end consumer wasn't able to buy some of these seats. But they're seeing this. They're seeing the resilience of the U.S. consumer across the space. I also thought interesting, Delta said they have not seen any impact in its operations when it comes to the shutdown. This issue of whether or not you're going to see flight delays was a pressure point in 2019 when the FAA was saying all these flights were going to be delayed into LaGuardia and Orlando. President Donald Trump caved at that point. This could potentially be a pressure point, and Delta at this moment not seeing it.
Yeah, and we're seeing that kind of ripple through. You saw the shares there up almost 8% in the pre-market trading, and other shares, United and American, up more than 5%. We'll carry that story forward ahead of bank earnings that kick off with JPMorgan next week. Coming up tomorrow, Christian Nolting of Deutsche Bank, Katie Kaminsky of Alpha Simplex, Republican Congressman French Hill of Arkansas, and Paul Christopher of Wells Fargo, with markets trying to continue their string of record closes, heading in with a pretty flat futures. This was Bloomberg Surveillance.